So I'm confident that the grid is going to green. The impetus is there.
Is that a state or is it a federal mandate? Because I could see this breaking on political lines, red states maybe being more open to green, so on and so forth.
Yeah, sure, it does fall along political lines, but the renewable energy that's happening in New York is state-driven. The offshore wind is controlled by the federal government, but those were cited years and years ago, and so those projects are moving forward.
What about solar and solar efficiency? I talked to some neighbors who are like, okay, we want to do solar, but the payoff is, it's a very expensive capital expense. Financing's really high now because of rates. And they're like, yeah, it pays off in like 12 years. That's a long time.
Yeah, it is, but we need all of the above, right? And so the issue in big cities is we just don't have a lot of place to put solar panels, right? And so offshore wind is going to be the future of renewable power, and that's where you see the projects going.
We looked into covering it at our old apartment building, which was like 5 floors, 90 units, and the assessment we got, Paul, was like, it'll cover 5% of your monthly usage.
Really?
If you did the whole roof.
Yeah.
Yeah. Just because it's a big building and not a lot of roof space.
Yep. Well, Bloomberg, our Princeton campus in New Jersey, huge wind, solar farm
very
down
cool.
there. Yeah,
Just depends on the location.
Yeah, so they're all in. So I'm not sure how much sun they get in New Jersey, but we'll see. All right, John Mandyke, thanks so much for joining us. John Mandyke, he's the Chief Executive Officer of the Urban Green Council, joining us here in our Bloomberg Interactive Brokers studio, talking about, electric vehicles get a lot of the headlines about energy transition, but there's a similar trend going for buildings around the country, and so we'll see how that technology develops. Looking at the markets right here, still a little bit of a lift here to the market. The S&P's up about 0.3%, the NASDAQ up 0.2%, and the yields coming in today, we're off about 6 basis points coming in here on your 10-year Treasury, 4.42%. Call out the 2-year as well, 4.8%. Remember, that was just up at 5% about a cup of coffee ago, as Tom Keene would say. On the commodity front, WTI crude oil, it is down about 0.5%, just above $78 per barrel. Gold, it is also a little bit lower here, breaking that streak to $2,317. And Bitcoin, I'll call that out because Tom is not here. Bitcoin finds a little bit of a bid out there, up about 1%. We're looking at about 63,900 on Bitcoin. And the stock of the day, really since the beginning of trading in pre-market, has been the Walt Disney Company. Stock is down, let's call it 10%. And that is a big move. I would not have called that early in the morning. They had a beat, they had a little bit of a raise, but talking about some potential weakness at the theme park business, maybe some of that post-pandemic surge is starting to wane here. So, and that is 70% of their operating income comes out of their theme parks and experiences. So keep an eye on that. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index remaining close to the highest level in roughly a month. Investors, though, at a crossroads about how much further the market can sustain the rebound from April's sell-off. S&P up 14 now, a gain of 0.3%. Dow Industrials up 85, up 0.2. The Nasdaq Composite Index up 37, higher now by 0.2%. 10-year at 4.42%, with a 2-year that's now yielding 4.80%. Spot gold today is down $7 the ounce to $23.16, a drop of 0.3%. West Texas Intermediate crude oil down 0.3%, $78.21 a barrel, and Bitcoin right now up 0.9%, 63,861 on Bitcoin. Instacart is partnering with Uber to offer restaurant delivery through the Instacart app, taking on the top U.S. food delivery app, DoorDash. Instacart users in the U.S. will be able to order from hundreds of thousands of restaurants using an Uber Eats interface that will become available within the Instacart app sometime in coming weeks. Right now, we've got shares of Uber down 0.3%. Maple Bear, the parent corporate name for Instacart, up 1.8%, and shares of DoorDash, they are down now by 2%. Recapping, stocks higher, S&P up 13, up 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate it. Paul Sweeney, all by my lonesome in here. They've all bailed on me today. It is just me for the rest of the next 40 minutes or so here on Bloomberg Intelligence. We are here in a Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. I'll tell you, if you want to get a story on the Bloomberg Terminal and get like maximum hits, maximum readership, just talk about Wall Street and bonuses. Everybody clicks on it. Bonuses seen soaring for bond desk traders in early prediction. That's the story getting a lot of readership. I'm going to check in with Allison Williams. She's been covering the investment banks for decades on Wall Street. She now covers them for Bloomberg Intelligence. She joins us from Princeton via Zoom here. Allison, early May, isn't it way too early to be talking about bonuses?
I think so, although, you know, to your point, the appetite for any incremental knowledge about compensation is insatiable. We just, you know, we've really just gotten sort of the look back at last year. We've had the first quarter of results, but, you know, to your point, you know, it's a long way out. And I would say if you look at some of the estimates in the story that you're referring to, I mean, some things seem sort of reasonable, right? So wealth and asset management, you know, markets are at, you know, close, the global markets are at close to record highs. Certain markets are, you know, hitting highs. And obviously there's strength all around, but we are in early May. But we look at some numbers. So the story, I think, as you said, most bullish seemingly on bond trading revenues. And it's tough for us to see, you know, certainly it's possible to get a huge increase in fixed income trading, but fixed income trading has been doing well the last few years. And we do think that business is resilient. But when we say resilient, we say, you know, about in the range of last year. Similarly, equities, again, about in the range. I mean, where we think things are going to be much better than last year is that, you know, debt underwriting, equity underwriting. I mean, those are the businesses really strong in this quarter. But keep in mind, they're coming off of a very low base. So, you know, 2021 was just an incredibly strong year. We've had really 2 really bad years. And compensation has not really gone down to reflect that. I mean, it's gone down, but not as much as you would think, just because there was such a scramble in 2021 for talent. The banks that we talk to, you know, are cognizant of that, and they don't want to go back to that. And we did hear a lot of encouraging things about the pipelines, as I said, 1Q strength. So, you know, out of all the numbers, maybe that is the most optimistic, but we are early in the year.
Hey, Allison, on a typical bond desk or equity desk, how much principal risk, if any, do they take? Do their traders get to take positions, or is most of the commissions that they report just kind of, agency trading on behalf of their clients?
So it's always a big mystery from the outside in terms of the types of risks, and traders and banks will say since the global financial crisis that it's really hard to define and separate. I would say that certainly the proprietary trading that really fueled a lot of the banks around the time of the global financial crisis has certainly something that the regulators have attempted to scale back. And you can see in different business models those that really do focus on the flows. I would also note that there are certain businesses that are really much more geared towards flows. So if we look at something like currency trading, very high turnover, high flow business, versus something like asset-backed trading, where it is much more specialized and you are using the balance sheet.
So for a typical trader out there these days, Allison, do we have a sense of what percentage of their compensation is really variable, kind of year-end bonus versus fixed salary? Like when I was on the street many years, my total compensation, 90% of that would be bonus. And I understand it's changed a little bit as they've kind of tried to increase the percentage of base salary.
So it has changed. I mean, that was sort of one of the interesting developments and perhaps unintended consequences that as we moved out of the financial crisis, regulators really wanted to limit that portion that was a bonus. And what ended up happening was salaries ended up going up. So to your point, back in the day, before the global financial crisis, you could see salaries roughly equivalent across the board. But for someone on the lower end, their bonus was, a fraction of their salary, whereas for someone on the higher end, their salary was a fraction of their total comp. And so actually what that did for investment banks was really increase the volatility of the headcount, especially towards year end, because if it was a bad year, investment banks, could cut people. And since the majority of the payout was the bonus, it really kept that sort of higher correlation costs with revenues. But since then, because banks have tried to even that out a little bit, and certainly it is still a sizable portion, I think, for the higher end. As I said, not as skewed as in the past, but certainly still can be skewed, and I think have sort of grown into that over time, just because, as I said, it can be so variable. And so at least, if it is a bad year, there is some kind of floor that people can count on. But as we discussed, people reading these stories still thinking about the year-end comp, it really is something that is variable with the revenue. So to the extent that bonuses are looking good, the underlying thought would be that you are pretty bullish on the revenue for these banks.
So let's step back a little bit. Allison, you covered all the big banks, the big investment banks, everything across the board on global Wall Street. What's kind of the theme here when you talk to investors here? I'm thinking back to the most recent round of earnings calls, and the Jamie Dimons and the Brian Moynihans sounded pretty optimistic about their prospects. When you talk to investors, do they want to take your phone call?
So investors, I think, are sort of buying into the optimism on investment banking fees. But I think, when they're thinking about the stocks of someone like a Goldman Sachs, that's much more meaningful than thinking about the stock of something like JP Morgan. So, JP Morgan, Bank of America, Citigroup, Wells Fargo, it's really that net interest income that investors are keenly focused on. Net interest income was the story of the quarter in terms of banks disappointing on the outlook. We think that's, again, we're early in the year, and we think it's, prudent for banks to be conservative. JP Morgan has their investor day coming up. We'll see what happens there.
When is that?
But related to the capital markets business, the focus of our discussion, I think that for investment banking fees, that the banks are more bullish than I've heard in a long time, but obviously that's going to depend on sort of the market follow through. And it is smaller. Trading is such a bigger part of the business. And the good news on trading is, when banking is strong, it creates all those trading opportunities. We definitely saw that in the equity trading business. When markets are strong, prime brokerage is strong. We had record hedge fund balances entering this quarter. Goldman talking about very strong balances there. But again, for the diversified banks, investors focusing on that NII. For the capital markets banks, I think investors can get a little more excited about these markets. The question, of course, is how sustainable are those markets?
So the JP Morgan Investor Day, that's May 20th. Is that in New York?
It is in New York.
Ooh,
and I think, aside from the net interest income story, where we do think, there still could be upside to where some of the estimates are today.
Right.
We are also going to be, I think, two things we're going to be focusing on, one of which is, the return targets.
Yep.
We know that we got this Basel III endgame, which turned out was not the endgame. We're going to get changes.
Okay.
We're not going to have answers ahead of Investor Day, but how is JP Morgan thinking about that? How will that impact their targets?
Okay.
And then the credit card side of things. I mean, credit card has been super strong.
Yep.
Especially for JP Morgan and Citigroup. There's a lot of regulations going on.
All right.
The Sapphire card is definitely...
we'll circle back with you then on that Investor Day for JP Morgan. Alison Williams from Bloomberg Intelligence with our news in New York City. Here's Michael Barr.
Thank you, Paul and Charlie. Porn actor Stormy Daniels took the witness stand this morning in the hush money trial of former President Donald Trump. They're in a brief recess right now. She plans to testify about a sexual encounter she says she had in 2006 that resulted in her being paid off to keep silent during the 2016 presidential election. Trump insisted this morning outside the courtroom that there was no cover-up.
That's the fraud. That's what they're trying to get us on. The fact that we call a legal expense. They marked it down in the books. The check was signed.
Loyola law professor and former federal prosecutor Lori Levinson.
I think the jury wants to size up. Is she somebody who can be believed? Was it Donald Trump who was trying to suppress her statement? The finances might have been handled by other lawyers, but it is key to this case whether there was the initial affair at all between the former president and Stormy Daniels.
Law professor Lori Levinson. Daniels did not pause to look at Trump, who stared straight ahead as she entered the room. Vladimir Putin has been sworn in for a fifth term as Russia's president. As Bloomberg's Henry Mayer reports, he delivered a confident message at his inauguration.
He was very uncompromising. One of the main themes of the speech that he gave after he swore the oath for his new term was that Russia would not give up, that Russia was strong, it was united, and it would not allow anyone to dictate to it how to behave.
Bloomberg's Henry Mayer. 1 out of every 24 New York City residents is now a millionaire. That's according to a global ranking of the wealthiest cities by Henley and Partners and Immigration Consultancy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 index, all advancing. Russell 2000, by the way, outperforming, up 0.7%. To put that in context, S&P up by 0.2% right now, higher by 12 points. Dow Industrials up 65, a gain there of 0.2%, while NASDAQ is up 26, a gain of 0.2%. 10-year, 4.42%. The 2-year, 4.80%. Spot gold down 0.4%. 23.14 the ounce. West Texas Intermediate crude also down 0.4%. 78.15 for a barrel of WTI. Words of caution today in an essay by a top Federal Reserve official. And with that story, here's Bloomberg's Vinny Del Giudice.
Minneapolis Fed President Neil Kashkari says inflation data raised questions about Fed policy and whether it's restrictive enough. Kashkari singles out housing costs and suggesting there's more to do. He suggests so-called neutral interest rates, those that neither nor stimulate the economy, may be higher in the short term. Case in point, Fed officials have held the benchmark U.S. interest rate at a 2-decade high for almost a year. Vinny Del Giudice, Bloomberg Radio.
Disney shares after earnings now down by 10%. The world's biggest entertainment company reported subscribers for its Disney Plus streaming service were lower than analysts expected. Recapping, S&P up 12, up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So you can head over there and search Bloomberg Podcast, and that's where you'll find us. Looking at the shares of Tesla, off 3% today, off about 28% year to date. Obviously the issues there for the EV business is probably simply one of as simple as demand. What is ultimate demand out there in the marketplace, and how do you get there and satisfy that demand on a profitable basis? When you think about Tesla, more news out today that I think is buffeting the stock here. First and foremost, Tesla Autopilot probe escalates with U.S. regulators' data demand, so that's an issue for the company. And then also reported today that Tesla going to have some April decline in China shipments. So again, goes to that demand issue. Let's bring it all to bear here. Craig Trudell, Global Autos Editor for Bloomberg News. He joins us from London via Zoom. Craig, again, a lot of issues, a lot of cross currents for Tesla. Let's start with issue number one today, which is just this autopilot probe here. Give us the background here and give us kind of the lay of the land on this particular issue.
Yeah, this goes back quite a ways. I mean, we saw federal scrutiny of autopilot almost from the beginning when there was a fatal crash way back in 2016, around the time that Tesla started to market this technology. It sort of, gives people the impression from the name, at least among some people, that you can maybe tune out, or that the driver will, the car will run on autopilot. In this case, and in the case of full self-driving, however, you, the driver, are in control and are responsible for the vehicle. And one of the big problems that Tesla has had has been keeping drivers in control and attentive. And so, in August of 2021, the National Highway Traffic Safety Administration opened a probe into whether autopilot was defective. While it closed that probe recently, it opened a new one having to do with a recall in December. So Tesla tried an over-the-air software update to guard against misuse of the system, and there have been 20 crashes just in the handful of months since that over-the-air software update. So NHTSA is looking into whether or not that recall was effective and whether more needs to be done here.
Is there any feeling from Tesla or any statement from Tesla about how they plan to either fix this or maybe update the autopilot and improve the autopilot technology?
I think we will keep a close eye on Elon Musk's X feed. That seems to be the sort of only means in which this company communicates to some degree. But I do think one of the interesting things here is we have seen him in the past sort of rail against outdated language around recalls. And in the case of autopilot, I mentioned the over-the-air nature of the 6 that they deployed in December. I think one of the keys for investors is a concern as to whether or not that's going to be sufficient. Do they need to install a different type of camera, or in some vehicles even just a camera at all, to pay attention to whether the driver is paying attention and monitoring the driver and doing more to sort of measure and evaluate engagement. And they're really being asked to cough up quite a bit of data here, and are being given a deadline of July 1st to hand over that information to give NHTSA what it needs to determine whether this recall did enough.
Yeah, and this feels really important for Tesla, because I think Tesla, in terms of the investment narrative, they're trying to get away from focusing on the number of vehicles sold to thinking more about Tesla as a AI company, as a robo-taxi company, as just the technology that can maybe be used across the industry. So they need to get this stuff right, don't they?
They do, and I mean, to Tesla's credit, I mean, the over-the-air capability that they built into their vehicles was really novel when they were first, sort of coming onto the scene. I'll never forget that, the Model 3 was coming out, and the brake distance was not up to snuff for Consumer Reports, which was evaluating this, new car that was really important to Tesla at the time. And, speaking of Musk's, I guess, then Twitter feed, he sort of said, I'm on it. They did an over-the-air software update. Consumer Reports retested the car, and through an over-the-air update, they were able to shorten the braking distance. And, the question here is whether autopilot, if they do need to come up with a hardware solution to fix a defect with autopilot, that's going to be expensive, or has the potential to be very expensive, especially since this is a company that doesn't have a franchise dealer network. They would have to, deploy service vans to cars and go fix this stuff, which is going to cost a heck of a lot more money than flashing a software update over the air.
All right, issue number 2, at least for today, as it relates to the stock, preliminary data from the China's Passenger Car Association showed shipments from Tesla's Shanghai factory dropped 18% year on year in April, even as the broader market for new energy cars grew. Not good news for Tesla. What do we know?
No, and it's been the case that this is a company that tends to have a lot of up and down months in terms of how they build their cars. They've tried to move away from this, and I don't think we've necessarily seen a whole lot of follow through there, where you tend to see lulls in the beginning of each quarter, followed by a sort of end of quarter push. And so, March, December, these end of quarter months, you tend to see an uptick, but then a sort of drop off in the subsequent months. I think in this case, though, the year over year change is in and of itself plenty alarming, especially when you compare Tesla against some of its Chinese competitors. A lot of these companies really are not having the demand problems that we're seeing Tesla have. And I think it's also problematic in the sense that, wholesales from this plant in Shanghai are also a reflection of demand here in Europe, because this is a plant that has been a export hub for Tesla. And so it's not only an indication of some softness in China, but potentially in export markets, including Europe.
Interesting. So that kind of goes to that, I think probably the overarching concern for Tesla and just for the EV business in general is just the ultimate end demand for EVs here. So we'll have to see how that plays out. Craig Trudell, thank you so much for joining us. Craig Trudell, Global Autos Editor for Bloomberg News from our beautiful New York headquarters in London, Queen Victoria Street, coming at us via Zoom. Again, Tesla stock off 2.8% today, off 28% year to date. On a trailing 12-month basis, eking out about a 5.5% gain here. So there's definitely some concerns there for Tesla across the board. I think they're pretty well known. But again, for me, it kind of all comes down to where is demand for EVs in general, not just for Tesla. I think that's a big concern for a lot of investors and a lot of for the traditional automakers as well. Market cap, $570 billion for Tesla right here. Stock off 2.8%. S&P 500, it's up about, let's call it 0.3%. We're going to have more coming up. This is Bloomberg.
pain of survivors, the bravery of heroes who stood up to Hitler's unspeakable evil, and we recommit to heading and heeding the lessons that one of the darkest chapters in human history, to revitalize and realize the responsibility of never again. Never again, simply translated for me, means never forget. Never forget. Never forgetting means we must keep telling the story. We must keep teaching the truth. We must keep teaching our children and our grandchildren. And the truth is, we're at risk of people not knowing the truth. That's why growing up, my dad taught me and my siblings about the horrors of the Shoah at our family dinner table. That's why I visited Yad Vashem with my family as a senator, as vice president, and as president. And that's why I took my grandchildren to Dachau so they could see and bear witness to the perils of indifference, the complicity of silence in the face of evil that they knew was happening. Germany, 1933. Hitler and his Nazi party rise to power by rekindling one of the world's oldest forms of prejudice and hate, anti-Semitism. His rule didn't begin with mass murder. It started slowly across economic, political, social, and cultural life. Propaganda demonizing Jews, boycotts of Jewish businesses, synagogues defaced with swastikas, harassment of Jews in the street and in the schools, anti-Semitic demonstrations, pogroms, organized riots. With the indifference of the world, Hitler knew he could expand his reign of terror by eliminating Jews from Germany, to annihilate Jews across Europe through genocide, the Nazis called the final solution. Concentration camps, gas chambers, mass shootings. By the time the war ended, 6 million Jews, 1 out of every 3 Jews in the entire world, were murdered. This ancient hatred of Jews didn't begin with the Holocaust. It didn't end with the Holocaust either, or even after our victory in World War II. This hatred continues to lie deep in the hearts of too many people in the world, and it requires our continued vigilance and outspokenness. That hatred was brought to life on October 7th in 2023. On the sacred Jewish holiday, the terrorist group Hamas unleashed the deadliest day of the Jewish people since the Holocaust. Driven by ancient desire to wipe out the Jewish people off the face of the earth, over 1,200 innocent people, babies, parents, grandparents, slaughtered in their kibbutz, massacred at a music festival, brutally raped, mutilated, and sexually assaulted. Thousands more carrying wounds, bullets and shrapnel from the memory of that terrible day they endured. Hundreds taken hostage, including survivors of the Shoah. Now, here we are, not 75 years later, but just 7.5 months later, and people are already forgetting. They're already forgetting that Hamas unleashed this terror. It was Hamas that brutalized Israelis. It was Hamas who took and continues to hold hostages. I have not forgotten, nor have you, and we will not forget. And as Jews around the world still cope with the atrocities and trauma of that day and its aftermath, we've seen a ferocious surge of anti-Semitism in America and around the world. Vicious propaganda on social media. Jews forced to keep their hide, to keep us under baseball hats, tuck their Jewish stars into their shirts. On college campuses, Jewish students blocked, harassed, attacked while walking to class. Anti-Semitism, anti-Semitic posters, slogans calling for the annihilation of Israel, the world's only Jewish state. Too many people denying, downplaying, rationalizing, ignoring the horrors of the Holocaust. And October 7th, including Hamas's appalling use of sexual violence to torture and terrorize Jews. It's absolutely despicable, and it must stop. Silence. Silence and denial can hide much, but it can erase nothing. Some injustices are so heinous, so horrific, so grievous, they cannot be buried, no matter how hard people try. In my view, a major lesson of the Holocaust is, as mentioned earlier, was not inevitable. We know hate never goes away, it only hides. And given a little oxygen, it comes out from under the rocks. But we also know what stops hate. One thing, all of us. The late Rabbi Jonathan Sachs described anti-Semitism as a virus that survived and mutated over time. Together, we cannot continue to let that happen. We have to remember our basic principles as a nation. We have an obligation. We have an obligation to learn the lessons of history so we don't surrender our future to the horrors of the past. We must give hate no safe harbor against anyone, anyone. From the very founding, our very founding, Jewish Americans, who represent only about 2% of the U.S. population, have helped lead the cause of freedom for everyone in our nation. From that experience, we know scapegoating and demonizing any minority is a threat to every minority and the very foundation of our democracy. So in moments like this, we have to put these principles that we're talking about into action. I understand people have strong beliefs and deep convictions about the world. In America, we respect and protect the fundamental right to free speech, to debate and disagree, to protest peacefully and make our voices heard. I understand that's America, but there is no place on any campus in America, any place in America, for anti-Semitism or hate speech or threats of violence of any kind. Whether against Jews or anyone else. Violent attacks, destroying property, is not peaceful protest. It's against the law. And we are not a lawless country. We're a civil society. We uphold the rule of law. And no one should have to hide or be brave just to be themselves. To the Jewish community, I want you to know, I see your fear, your hurt, and your pain. Let me reassure you, as your president, you're not alone. You belong. You always have and you always will. And my commitment to the safety of the Jewish people, the security of Israel, and its right to exist as an independent Jewish state is ironclad, even when we disagree. My administration is working around the clock to free remaining hostages, just as we have freed hostages already, and will not rest until we bring them all home. My administration, with our second gentleman's leadership, has launched our nation's first national strategy to counter anti-Semitism. That's mobilizing the full force of the federal government to protect Jewish communities. But we know this is not the work of government alone. or Jews alone. That's why I'm calling on all Americans to stand united against anti-Semitism and hate in all its forms. My dear friend, and he became a friend, the late Elie Wiesel said, quote, "One person of integrity can make a difference." We have to remember that, now more than ever. Here in Emancipation Hall, the U.S. Capitol, among the towering statues of history, is a bronze bust of Raoul Wallenberg. Born in Sweden as a Lutheran, he was a businessman and a diplomat. While stationed in Hungary during World War II, he used diplomatic cover to hide and rescue about 100,000 Jews over a 6-month period. Among them was a 16-year-old Jewish boy who escaped a Nazi labor camp. After the war ended, that boy received a scholarship from the Hillel Foundation to study in America. He came to New York City penniless, but determined to turn his pain into purpose, along with his wife, also a Holocaust survivor. He became a renowned economist and foreign policy thinker, eventually making his way to this very Capitol on the staff of a first-term senator. That Jewish refugee was Tom Lantos, and that senator was me. Tom and his wife Annette and their family became dear friends to me and my family. Tom would go on to become the only Holocaust survivor ever elected to Congress, where he became a leading voice on civil rights and human rights around the world. Tom never met Raoul, who was taken prisoner by the Soviets, never to be heard from again. But through Tom's efforts, Raoul's bust is here in the Capitol. He was also given honorary U.S. citizenship, only the second person ever after Winston Churchill. The Holocaust Museum here in Washington is located in a road in Raoul's name. The story of the power of a single person to put aside our differences, to see our common humanity, to stand up to hate, and its ancient story of resilience from immense pain, persecution, to find hope, purpose, and meaning in life. We try to live and share with one another. That story endures. Let me close with this. I know these days of remembrance fall on difficult times. We all do well to remember. These days also fall during the month we celebrate Jewish American heritage. A heritage that stretches from our earliest days to enrich every single part of American life today. Great Jewish American named Tom Lantos used the phrase, "The veneer of civilization is paper thin. We are its guardians, and we can never rest." My fellow Americans, we must be those guardians. We must never rest. We must rise against hate, meet across the divide, see our common humanity, and God bless the victims and survivors of Shoah. May the resilient hearts, the courageous spirit, and the eternal flame of faith of the Jewish people forever shine their light on America and around the world. Pray God. Thank you all.
President Joe Biden just wrapping up his speech on anti-Semitism given on Capitol Hill at the U.S. Holocaust Memorial Museum's annual Days of Remembrance ceremony. Welcome to Balance of Power. I'm Kaylee Lyons. Joe Matthew is off today. We just heard from President Biden describing what he said the hatred of the Holocaust brought back to life on October 7th when he said that Hamas unleashed terror on Israel, going on to describe what he called a, quote, ferocious surge of anti-Semitism around the world in the aftermath, saying too many people have been denying, downplaying, or rationalizing the horrors of the Holocaust and October 7th, saying that's despicable and it must stop. He also touched on the right to free speech and peaceful protest, but he said there is no place on any campus or any place in America for hate speech or violence of any kind, whether against Jews or anyone else. He also said in this speech that he is calling on all Americans to stand united against anti-Semitism and hate in all of its forms. We want to get reaction now to this speech on Bloomberg Television and Radio from Terry Haynes. He is the founder of Pangea Policy and is with me now. So Terry, I'm sure you were just hearing the words of the president. Obviously, this speech comes at a very tenuous political time for him as he has been facing blame for what we're seeing happening on college campuses across the country, a lot of backlash in regard to his support and policy toward Israel. Did he do what he needed to do with this speech today?
Well, I think he didn't hurt himself by the speech. A couple of things. Firstly, it's a fine and necessary thing for the president to do. In that sense, it's a very good thing. And as a citizen, I applaud it. Number one. Number two, as somebody that knew Tom Landos a little bit as an old congressional staff hand, I'm very glad to hear his name and his example raised up and discussed. I think what the president needs to do is more than that, though. Those are fine words, and I have no doubt that they are sincerely meant and sincerely delivered. At the same time, what you have in the president's government is the lack of really two things. One is, and this goes back to before the current difficulties of the past 6 months or even the last week. You've got two problems. One is that the president needs to clearly state and work to persuade people of what the foreign policy of the United States is. This is really the first time in about 80 years, ever since the Second World War, that a unified view of foreign policy has been challenged. And it's one reason why it took 6 months to get aid for Ukraine, aid for Israel, aid for the Indo-Pacific. The second thing you need to see is clear execution of that foreign policy. What we're getting in the current Middle East situation, I'm sorry to say, is a lot of muddle. And the suspicion is rife even among allies that what's happening is that the United States domestic politics are making it difficult for the United States to respond strong, forcefully, and consistently. And the president needs to use a lot of that sentiment that he just expressed in order to right that ship, I think.
Well, and I wonder how much of the ability to right this ship is predicated on a temporary ceasefire agreement being reached, Terry, not only helping it navigate the situation geopolitically in regard to what's happening in the Middle East, but also at home in terms of pacifying some of those who have been protesting against this war and against this administration.
My 2 cents is that you deal with the situation first, straight up as is, and then you apply the politics to the situation, rather than applying the politics first and then dealing with the substance later. You've got an awful lot of concerning loose ends out there, in my estimation. Loose ends about the degree to which the United States knew about what is now known as a Hamas counteroffer, not an agreement. Who knew about it, when they knew about it, and whether the United States was trying to pressure Israel into it when Israel had made it clear previously, supposedly, that they would not agree with those terms. Publicly, it looks like what's happening is that the United States is trying to buffalo Israel a little bit through arms shipments, through rhetoric, and a bunch of other things. This is a pretty good time, whatever else, for the United States and Israel as strong allies to get back on the same foot together, and hopefully we see evidence of that in the next days.
Well, of course, Biden is still at this event, Terry. He is actually seated right next to the Speaker of the House, Mike Johnson, and the House has passed some anti-Semitism legislation just last week regarding the definition of anti-Semitism, a broadening of it. It is specifically as it's applied by the Department of Education, raised a lot of concerns about free speech. Should we expect that legislative effort or any others to combat anti-Semitism can actually make it through both chambers, knowing it's unclear at this time what the Senate's going to do with that particular piece of legislation?
Oh, I expect it will. It's difficult to, from looking at it from a politician's perspective, it's difficult to argue that what you shouldn't do is express as strongly as possible, your opposition to anti-Semitism in all its forms. At the same time, the president's quite right to say that government response by itself isn't much. It won't do the job, and I'm not Jewish, but I know Jews will believe that governmental statements are well and good and fine, but that's not the sole solution and won't by itself fix the problem. But you have a situation here where, the government will do things, certainly, but at the same time, the more pressing question is not just anti-Semitism at home, but it's also what the administration does abroad. And my assessment is the United States needs to be a lot clearer about what they expect, how they expect it, and why they expect it in the Middle East. And also at the same time, do things that help the broader peace process that involves Saudi and Jordan and a bunch of other nations along. That's a difficult balancing act. I don't say it because it's easy, but that's the task before the administration.
Well, and we'll see if they ultimately are able to complete that task in its entirety, Terry. There is a separate piece of breaking news I do want to get your take on as well. We just got from TikTok a filed petition in federal court suing the U.S. government as expected over that divest or ban bill that was passed as part of the supplemental package by both chambers of Congress and signed into law by President Biden. TikTok says it is seeking to overturn what it calls a, quote, unconstitutional TikTok ban. They say a standalone U.S. platform would not be commercially viable and that a qualified divestiture is not possible. Terry, how do you see all of this going down? TikTok pointing out here the law would force a shutdown of the app by January 19th of 2025. Is this going to be legally resolved by then?
I think by January of 2025, I think it's more likely than not that it's not completely resolved. They will, they'll use all their legal tools, including appeals to the Supreme Court and the like, to do that. And we're basically talking about less than 9 months in order to achieve that. So I doubt that happens in the end. The other thing I'll say about this is from a perspective as an old communications lawyer and a telecom advisor in both Congress and at the FCC, where I was a presidential appointee once upon a time, that, I don't find TikTok's views here persuasive at all. First Amendment rights fundamentally are those expressed and held and used by citizens. There are limited First Amendment rights for corporations and the like. But, the net of this is that nobody's speech rights are being affected negatively in any way if TikTok goes away. They, just like in India, they'll migrate to other apps and you'll be done with it. But the core of this issue here isn't speech at all. It's national security. And TikTok and the Chinese government beyond it probably don't want a situation where the United States government starts talking about exactly how TikTok uses its app. And even if it's done behind closed doors, the least that will happen is that TikTok itself and the Chinese government will be somewhat embarrassed by that. So it may well be that what happens is you have a teeth gnashing today in a legal sense, but in the end, they divest or they shut down.
Well, and of course, a divestiture, to your allusion to the Chinese government, Terry, would need to be signed off on by China. And I wonder if that really is the rub here, is if the CCP is going to be signing off on this or not.
Yeah, well, I think they'll probably push as hard as they can to the contrary, not only because, they want to continue the operations that they're using the app for in the United States, but they want to do so in other countries as well. So, they'll try to push back on that as much as possible. But just like in the United States, you can't have foreign entities, even owning broadcast channels, foreign governments and the like. The United States government also is not going to stand for situations where data is scraped and used for whatever purposes by a foreign government that's thought of as best as a competitor and worst as somewhat less than openly hostile. So what you have is a situation where the Chinese government is much more between a rock and a hard place than I think the United States government is, frankly.
All right, Terry Haynes, founder of Pangaea Policy, thank you so much for joining, not just on this news from the lawsuit, from TikTok, but also, of course, after President Biden delivered his remarks on anti-Semitism from Capitol Hill. This, of course, following news that Israel has moved to take control of the Rafah crossing into Egypt on the border with Gaza. So we're going to dig more into what exactly is happening on the ground in the Middle East with Nick Wadhams, who covers national security for us here at Bloomberg, as well as Jordan Fabian, who covers the White House. More coming up. This is Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg. We do have stocks trading at or near the best level of the day. TikTok is suing the U.S. government in the first challenge to a new law that would force Chinese parent company ByteDance to divest itself of the popular video app or face a ban. S&P up 15 now, up 0.3%. The comeback in stocks extending for a fourth day. The Dow up 49, up 0.1%. NASDAQ up 37, up now by about 0.2%. 10-year 4.43%. The 2-year 4.80%. Spot gold down $10.50 the ounce now, lower by 0.5%. 23.13 on gold. while West Texas Intermediate crude is up 0.2%, $78.70 for a barrel of WTI. Instacart is partnering with Uber to offer restaurant delivery through the Instacart app, taking on the top U.S. food delivery app, DoorDash. Right now, shares of Uber are down 0.6%, Instacart up 2.8%, DoorDash down by 2%. Recapping, we are looking at an update here. S&P very close to session highs, up 15 right now. That is a gain for the S&P of 0.3%. I'm Charlie Pellet. Balance of Power continues now. Back we go to Washington. And once again, your host, Kaylee Lyons.
All right, Charlie Pellet checking in on the day's trading from New York. Thank you so much. Meanwhile, here in Washington, it was just moments ago that President Biden wrapped up a speech on anti-Semitism given on Capitol Hill, in which he talked about the horrors, he said, of the Holocaust, echoes of it on October 7th, and a ferocious surge of anti-Semitism, as he described, that has been unleashed around the world in the aftermath. Here is a portion of what President Biden had to say.
We respect and protect the fundamental right to free speech, to debate and disagree, to protest peacefully, and make our voices heard. I understand that's America, but there is no place on any campus in America, any place in America, for anti-Semitism or hate speech or threats of violence of any kind.
The president there alluding to the ongoing protests we're seeing on college campuses across the country and, of course, across the world, or most of the way across it in the Middle East. There has been development overnight in regard to the war between Israel and Hamas, with Israel moving to take control of the Rafah border crossing between Gaza and Egypt. The question is this a precursor to the actual ground invasion that Israel has been hinting at for so long now? So we wanted to assemble an all-star Bloomberg panel. Jordan Fabian is with me. He is a correspondent, White House correspondent for us here at Bloomberg, alongside Nick Wadhams, who leads our national security coverage here in Washington. So Jordan, first to you, as we just heard from President Biden in a relatively lengthy speech about anti-Semitism. And while he was decrying it, calling for basically all Americans to stand together against it, not necessarily any substantive policy changes or anything like that that were announced as part of these remarks.
No, but it's important to know that he's been facing a lot of pressure from some people in his own party, some Democrats, moderate Democrats, and Republicans, to more forcefully denounce some of the anti-Semitism that's been seen at these college campus protests. He gave one speech about it last week, but that was the extent of his public remarks. Meanwhile, this has really been dominating the public discussion. And some of these things that have been happening on college campuses have been very chilling for Jewish students who may have had relatives who were killed in the Holocaust. Demonstrators chanting that they should be the next targets of Hamas, being blocked from entering campus areas and buildings. And so that was why you saw him speak out today in the manner that he did and in the place that he did, which was at a Holocaust remembrance event at the U.S. Capitol.
And of course, it wasn't just talking about what we're seeing on college campuses. The remarks were a lot broader than that in many instances. He also alluded to his administration's effort to bring home the remaining hostages that are still being held by Hamas, which gets us back to the efforts toward a ceasefire agreement, Nick. It was roughly at this time yesterday when we got news that Hamas had agreed to something put forward by Egypt and Qatar. Shortly thereafter, Israel essentially said what Hamas had agreed to was not something that Israel could do the same for. Where do we stand in these efforts now?
Well, that is really the question of the day. I mean, there is so much confusion around this conversation between Israel and Hamas, because what happened yesterday essentially was Hamas said, okay, we accepted this offer, and everybody thought, okay, that means we are headed toward a ceasefire. Israel said, wait a minute, not so fast. We believe there are significant gaps between what Hamas is suggesting and our original proposal. So it almost felt like this was a counter offer from Hamas rather than an acceptance of a proposal. However, we have spoken with officials, and there is reporting from other news outlets as well, suggesting that actually the difference in language between the various proposals is not all that different. So what we're really trying to see now is if the Israeli rejection of the Hamas proposal was essentially a tactic to try to potentially proceed with some form of the Rafah invasion, maybe try to get more concessions out of Hamas. So we're sort of still in it, but what's clear right now is no ceasefire on the immediate horizon.
After, of course, for weeks, if not months, Jordan, the administration has been pushing for a ceasefire. Bill Burns, the CIA director, is in the region trying to advance this effort. Antony Blinken, the Secretary of State, was in the region for a 7th time just last week. How hard is the White House likely to push Israel to accept whatever it is on the table, knowing that the White House also has been very explicit in telling Israel they do not want to see a ground operation in Rafah happen?
It's a bit of full court press. Now, I can't speak to this particular Hamas offer or counteroffer, however you want to describe it, but the administration really believes this ceasefire for hostages deal is the silver bullet for ending this conflict, and they really want this conflict to end. The campus protests are just one of a number of political problems that it's presenting for Joe Biden as he heads toward re-election in November. It's dividing Democrats, it's dragging down his approval ratings, and so they believe this temporary ceasefire would pave the way to a more permanent end to the conflict. Now, that's the rub with Israel. They don't want a ceasefire agreement to proscribe an end to operations, and so that's an issue they'll have to work through, but you can bet that people like Bill Burns and Antony Blinken are burning up the phone lines trying to bring an end to this.
Yeah, well, Nick, it really does seem like that is the big gulf that needs to be bridged, whether this is something temporary or something permanent, knowing that the Netanyahu government has made it very clear that they don't see this mission as accomplished until they have eradicated Hamas. There are remaining battalions still in Rafah, and especially with the news we got in the wee hours this morning that Israel has taken hold of the border crossing between Rafah and Gaza and Egypt. Is this a precursor to that ground operation actually happening in Rafah, or could this be a tactic to deploy in these negotiations?
I mean, there's a lot of debate about that right now. What's clear, though, is, as Jordan says, I mean, Prime Minister Netanyahu has essentially staked his political career on his vow to eradicate Hamas. So you can't, as he says, leave Hamas intact in a place like Rafah and just say, okay, ceasefire, now everything's okay. I mean, I think what you're seeing, though, is there is some belief that what Israel is doing is a smaller version of some sort of incursion in Rafah. I mean, the U.S. has put unprecedented pressure on the Netanyahu government. Do not go ahead with this invasion based on what we've seen of your plan so far. It will not work. There are too many civilians in harm's way. So one of the theories is that, okay, Israel does a sort of limited ground invasion, and that then satisfies Prime Minister Benjamin Netanyahu's need for some sort of an incursion into Rafah, and then you can pave the way toward that ceasefire.
Well, when we think about the ways in which the U.S. is exerting pressure, influence over the decision in terms of invading Rafah or whatever it is, we've had a lot of reporting in the last 2 days about, Nick, withholding arms shipments, or at least keeping them frozen for now. Are we starting to see the U.S. actually using military aid for Israel as leverage in a way that to this point we have not yet in this conflict?
I mean, that would be a real shot across the bow. There is reporting out there, obviously, that the shipment has been delayed. It is not yet clear to us that the U.S. is sending an explicit signal here telling Israel. I mean, the theory is certainly, and the timing looks like there's a correlation there, but we have not explicitly heard from the administration, okay, we are going to delay this to send a signal to you to tell you what could possibly happen. I mean, President Biden has essentially said, listen, we are going to do everything we can to help Israel defend itself. They are not going to leave Israel exposed, particularly after the attack by Iran a couple of weeks ago. So very, very murky situation, but the president so far at least has given no indication that he's willing to suspend that aid.
Well, I do wonder, though, Jordan, what indication the president really has given. I was just speaking with Terry Haynes from Pangea Policy, who suggested there has been a certain lack of clarity, if you will, in terms of the administration's policy. On the one hand, in the previous remarks we had heard Biden giving last week about campus protests, when he was asked whether it made him rethink Israel policy, he was very clear. He said no. But we have also gotten hints from him and others, be it John Kirby, the Secretary of State, many other figures in the administration who have suggested if Israel doesn't change its policy in terms of protecting civilian, allowing humanitarian aid to get in, that the U.S. may have to consider policy changes in return. So what is this administration actually willing to do or not?
That's a big question we're trying to untangle. And Biden said himself after the killing of the World Central Kitchen aid workers that he in fact would possibly recalibrate U.S. support based on their ability to deliver humanitarian aid and protect civilians in Gaza. But this one thing this ambiguity might do is give the U.S. a bit of flexibility to see what Israel does. If they come out with a hammer now and say, hey, we're cutting off military aid even before, the big invasion of Rafah starts, that kind of strips them of leverage later down the road if they want to even discourage Israeli behavior further. Now, leaving this sort of ambiguous allows them to, maybe say, hey, this is something that could happen, but we won't really pull the trigger until we see what you do. So it's a bit of game of cat and mouse we're seeing here between President Biden and Prime Minister Netanyahu.
Yeah, and we know that there certainly is a lot of tension in that relationship that in some instances has played out quite publicly, even as President Biden has been vocal and standing behind Israel as a state and its right to exist. Maybe the same doesn't necessarily go for all members of the Israeli government to the same extent. Jordan Fabian, White House correspondent for Bloomberg, alongside Nick Wadhams, who leads our national security coverage here in Washington. Thank you both so much for joining me as we break down news on the Israel front, both at home and abroad. Of course, questions about what will happen going forward in Rafah, where more than a million Palestinian civilians are taking refuge. And of course, what happens going forward in the U.S. as college campuses are still roiled with protests across the country. And President Biden today saying that there is no room for hate speech on any of them or in any place in America. We will continue to keep this conversation rolling here on Balance of Power. First, though, we got to get a check on world and national news elsewhere with Amy Morris in the 9-to-9 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. Israeli troops did take control of the Rafah border crossing area in Gaza. Hamas saying all aid flows from Egypt has stopped. Bloomberg Israel economy and government reporter Galit Alstein has more from Tel Aviv.
They say that this is a very specific targeted operation that is taking place there now, and we're not sure that this is part, it's hard to separate and distinguish the two, but this is not necessarily part of the all-out Rafah operation that Israel and the U.S. and many others have been talking about and anticipating over the past several weeks.
Bloomberg's Galit Alstein. It is the first time Israel's army moved into the area since the war began in October. President Biden denouncing anti-Semitism at college campus protests against the Israel-Hamas war during the annual Holocaust commemoration, saying that people are already forgetting what happened in October.
It was Hamas that brutalized Israelis. It was Hamas who took and continues to hold hostages. I have not forgotten, nor have you.
The president spoke at the Holocaust Museum's annual Days of Remembrance ceremony at the Capitol. The Boy Scouts of America changing its name for the first time in its 114-year history to become Scouting America. It won't officially become that until February. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at an S&P 500 index on the brink of 5,200, very close, 51.95 right now, up 14 points, higher by about 0.3%. As the comeback in stocks extends for a fourth day, the Dow higher by 43 now, up 0.1%. NASDAQ up 35, up by 0.2%. 10-year 4.43%, with the 2-year that's yielding 4.80%. Gold down $10 the ounce to $23.13, down 0.4%. While West Texas Intermediate crude is up 0.4, higher by 31 cents a barrel right now, 78.80 on WTI. So stocks are advancing, but investors are still split on whether the market can sustain the rebound from last month's sell-off amid economic cross-currents. There's also the question about the Federal Reserve and the outlook for rate cuts. Mark Zandi is chief economist at Moody's Analytics.
I do think the federal funds rate target of 5.5% is high, and it's putting a lot of pressure on the banking system, financial system, and broader economy, and they run the risk of breaking something. So they're taking a chance here, but I think at the end of the day, they want to make sure that they did what they said they're going to do. They're going to hit 2% on the core PCE deflator.
Mark Zandi of Moody's. TikTok is suing the U.S. government in the first challenge to a new law that would force Chinese parent company ByteDance to divest itself of the popular video app or face a ban. After earnings, Disney shares are now down by 10%. After earnings, Palantir down by 13.6%. Recapping, S&P 500 index at 51.95, up 0.3%. Balance of power continues. Back we go to Washington. Once again, your host. Here she is, Kaylee Lines.
All right, Charlie Pellet up in New York. Thank you so much. And New York is where a lot of the action is today, including in the hush money trial of former President Donald Trump, where Stormy Daniels is on the witness stand. A moment a lot of people have been waiting for. She, of course, is the porn star who allegedly had an affair with Donald Trump and was paid $130,000 to not have that story come out, according to prosecutors, just before the 2016 election. It's a key part of this case, and Daniels has been on the stand for a large portion of today, describing a dinner she had in a hotel room with Donald Trump. Their sexual encounter, she said, happened afterward, confirming that they did indeed have sex. A number of other encounters she had after that, following that first encounter, and then, of course, leading up to questions around her story and the relationship she had with Donald Trump in 2016. Something Daniel says on the stand, they were interested in paying for the story, which she says was the best thing that could happen, so my then husband wouldn't find out. She said the numbers didn't matter to her. So we want to turn now to June Grasso. She is the host of Bloomberg Law and has been following this trial very closely. So, June, of course, we already have had testimony as to much of the substance of the falsification of business records in that case, including yesterday the presentation of physical evidence checks that were signed by Donald Trump. How key is this testimony from Stormy Daniels, other than the salacious nature, perhaps the human interest element of it, to actually proving this case for the prosecution?
Well, she's not a necessary witness, so to speak, for the prosecution to be able to prove its falsification of business records. But she's there because the prosecution wants to show, well, a couple of things. But one thing they want to show is that this was so important, this relationship that she had, this incident in the hotel, that's the reason why Donald Trump would go to a lot of lengths to stop the story from coming out. So they want to put a face on it. They also are managing to get in a lot of detail, sort of character evidence about Trump that they wouldn't normally be able to get in because of what she's saying about him. And the jury's getting this picture. She's painting a sleazy picture of him, to put it in words that everybody can understand. I mean, he's asking her questions about the adult film business, about about sex. She's taking a rolled up magazine and hitting him with it playfully. And she also is saying that, he was rude, he was arrogant. And so the prosecution is getting that in, which is not part of the case, obviously. But what her testimony is supposed to be doing is to be showing how important it was for Donald Trump to stop this story from coming out.
Yeah, and as you talk about kind of the character aspects that we are getting here, the judge had previously ruled that the actual details of the sexual encounter aren't as pertinent to this case, June, but does it still actually make a difference ultimately in a jury deciding whether or not he is guilty of a Class E felony of falsifying business records, or is that just more something that we should consider as this is not just a former president, but an active Republican presumptive nominee?
I don't think it has anything to do with, his running or anything like that. I think what the prosecution is looking at is getting a conviction. And the jury shouldn't be considering this when they think about, when they deliberate. The judge said that he didn't want in too much evidence about the sex. And he did at one point say, I think we've gone far enough here. But then as she testified, things would come out that possibly the judge didn't want in there. But they did keep it, at least much of it, they kept confined and didn't talk too much about that. But a lot did come out, and that's because she was talking very fast. It seemed to be nervous and getting in details that sure the defense didn't want in there, and neither did the judge. But the defense didn't object very much, so we'll have to see what their strategy is here. They could have objected to a lot of the different things that she was talking about. I mean, different details that she gave about the encounter, but they didn't. So maybe they have a strategy of letting it all in. It's hard to tell.
Well, what's being let in now is actually her testimony around the non-disclosure agreement that she said was intended to keep information secret. She was asked by the prosecutor who the beneficiary of the NDA was. She said Donald Trump, adding that it was arranged by Michael Cohen. How important is his testimony going to be to follow hers, June?
I think the whole case is basically going to hang on Michael Cohen, no matter how much the prosecutors try to prop it up in different ways, which is what they're doing with all these witnesses before Michael Cohen comes up. They're showing the different ways they're trying to corroborate his testimony before it comes in, because they know when he does testify, the defense is going to have a field day with him. There's so many avenues to attack him and his credibility. So what they're trying to do is show other people and sort of lead up to his testimony. And then when he comes on, the jury will have heard, well, this witness said that, that corroborates that. Stormy Daniels talked about this. Keith Davidson, the lawyer who set up the agreement, talked about that. David Pecker, the National Enquirer publisher, talked about this, so we can believe him in that way, and also the documents that are going to come in. So, I mean, his testimony is critical. That's why they're calling him the star witness, because he really is the star witness in this case, no matter how much the prosecutors might like to get around that.
All right, June Grosso, host of Bloomberg Law, thank you so much. You'll be back with us in the next hour as well as we continue to get this testimony from Stormy Daniels on the witness stand in New York. And we want to consider now how all of this factors into Trump's ongoing presidential campaign and turn to our political panel. I'm joined today by Jeannie Shanzano, Bloomberg Politics contributor, and Lester Munson, BGR Group co-head of the international practice. So, Jeannie, first to you, as the court is now actually going on a lunch break and will return at 2 p.m. As we are hearing the details of this actual encounter, the initial one at least, in Tahoe between Stormy Daniels and Donald Trump, when she asked about his wife, saying, don't worry about it, we don't even sleep in the same bed. She emerged from the bathroom, she says, to Donald Trump laying on the bed, confirming they had sex, even questions about whether or not a condom was used. How does this play with, say, evangelical voters to this point have been backing Donald Trump? Does the salacious nature of this testimony, of this case, actually make a difference for the base?
For the base, I don't think so. There are very few people who support Donald Trump in that, infamous 36% who aren't, familiar with who he is and, what he has said and what he has done, and have been willing to support him regardless of so many of these factors. I think his real problem is, of course, this independent, moderate voter, swing voter, if you will. And, we just had the poll out the other day by ABC where 1/5 of his supporters said they'd consider not voting for him if he's convicted in the trial. we have to wait and see if that comes to fruition, both the conviction and their reconsideration. But that's where his big danger is. I think the base is with him all the way. He said it a million times. He can shoot somebody on Fifth Avenue and get away with it. I don't think anybody is surprised that he, at least allegedly had a relationship with Stormy Daniels.
So Lester, weigh in here. Is it really ultimately only a conviction that will matter, or could testimony like this be just as damaging for that small group of perhaps more persuadable voters that are out there?
Yeah, it's a great question, Kaylee. I'm not sure it actually matters whether he's convicted or not. I mean, this whole kind of turgid episode is hugely embarrassing for everyone involved. There's no doubt. And I think even the most ardent Trump supporter is pretty appalled at his behavior. But it's balanced by the fact that this prosecution seems very political, and it seems like Trump is being targeted for being the political leader of the opposition to, the parties that control the prosecution here. So we're between a rock and a hard place here with this trial. I don't really see how any of it benefits anyone. I think it's a net zero effect overall, and I'm not sure the conviction will be seen as credible by Trump supporters or even by Trump antagonists. Frankly, they're going to dislike Trump whether he's convicted or not. Trump supporters are going to continue to support him whether he's convicted or not.
And of course, a lot of it may not be just about Donald Trump himself, but the comparison between him and the man that he is going to be up against, at least our understanding is at this point in November, President Biden. And it's quite the split screen between the two of them today. Trump in court in New York, dealing with the testimony of Stormy Daniels, or at least having to sit through it, while here in Washington earlier today, President Biden was on Capitol Hill giving an address about anti-Semitism as part of annual Holocaust remembrance. Lester, what did you make of what we heard from the president? In many senses, kind of echoing what we had already heard from him last week about how there are limits. Free speech rights, yes, they exist. Peaceful protests surely is a right that should be protected. Not anything, though, that ventures into hate speech or violence. Also condemning anti-Semitism. Did he do enough at a time in which so many in this country seem to be displeased with him over this issue?
Yeah, Kaylee, I think he's going to have to manage this situation for the next 7 months through the election. This is not going to, one speech isn't going to answer the mail. It's a fine speech. I think his message is on, and he's in the right place. That's not necessarily going to satisfy some of his base. It's not going to antagonize folks on the other side either. He's going to have to manage this on a day-to-day basis. The Democratic convention in Chicago in August looms over all of this, with most of these campus demonstrations being taken down at this point. Where is it going to reemerge? Where is this thing going to grow again? The obvious place is going to be downtown Chicago in 3 months. So, or actually, yeah, in 3 months. So I think he's going to have to keep managing this. One speech is not going to be enough.
Well, to your point, Lester, I actually spoke yesterday with the governor of Illinois, J.B. Pritzker, and asked him what he made of comparisons between the convention of 1968, in which there were protests over the Vietnam War, versus this year in 2024, when we're seeing protests of this kind. He essentially, to summarize his answer, said there's always protests, but they will, of course, have safety precautions in place. Jeannie, to come to you on what we heard from President Biden today, was there any area in which you feel that he should have gone farther than he did today?
I like the fact that you mentioned this in terms of the split screen, because to me, that was really, really important. Here you have the ex-president and contender Donald Trump sitting in a criminal court in New York, where the judge is saying, if you do not stop violating this court's orders, I will have no option but to jail you. And you split screen that with President Biden talking about us as a civil society, a country of laws, the need to follow the rule of law. You have a right to engage in peaceful protest, but you cannot engage in hate speech. You cannot engage in violence. And that, to me, is a really important split screen. I think the big question for Joe Biden is going to be how this was received in the party itself, where I agree with Lester. It is a challenge for him. He had advice beforehand, and the advice was essentially, don't try to both sides this thing. And I think he avoided doing that He's going to have to continue to avoid doing that. But he also has a very energetic progressive left on his side who may not feel like he went far enough. So I think we have to wait and see how they receive this. But I think the most important thing is he's got to do his job as president. We are a system of law, and he's got to make the case that must be followed, even if you disagree with how that law is implemented. And it is an important split screen as you look at Donald Trump being accused of, again, violating court orders and threatened with jail.
Lester, we only have less than a minute left, but would a temporary ceasefire agreement between Israel and Hamas solve a lot of this problem for Joe Biden?
I think it would, at least temporarily. I think we need to see a resolution to the overall crisis for the president before the election. If the Gaza conflict continues to go up and down for the next 7 months, that is definitely going to impact his ability to maneuver politically to win as many votes as possible. So it's a constraint on him. I'm not sure a temporary ceasefire is the answer. He needs an end to the conflict.
All right, Lester Munson, BGR Group co-head of the international practice, and Jeannie Shanzano, Bloomberg Politics contributor. Thank you for joining me. You'll be back, of course, in our next hour as we cover everything from New York, where Donald Trump's hush money trial is underway again today, to Washington, where President Biden gave this speech on anti-Semitism. Much more is still coming up. This is
of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg Television and Radio, where we are following news from both the current and former U.S. presidents today. Current President Joe Biden given an address on anti-Semitism on Capitol Hill, while former President Donald Trump is in court in New York, where Stormy Daniels is on the witness stand. We'll have the latest this hour, plus reaction with Republican Congressman from Florida, Byron Donalds. We'll also get analysis from Cliff Young of Ipsos polling, as well as our political panel, Jeannie Shanzano and Lester Munson. And we'll bring you an interview with Minneapolis Fed President Neel Kashkari this hour, live from the Milken Conference. So a lot is ahead. First, though, as always, we got to start with the markets and get a check on those from Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee. We're looking at an update right now for the Dow, the S&P, NASDAQ, the outperformer right now, Russell 2000 up 0.7%. To put that all in context, we are looking at a gain now of just about 0.3% on the S&P, higher by 14 points now, again up 0.3. The S&P closing in on 5,200, 51.95 right now. Dow Industrials up 54, a gain of 0.1%. The NASDAQ Composite Index up 35, up 0.2%. 10-year 4.43%, with the 2-year that's now yielding 4.80%. Spot gold down $10 the ounce, down by about 0.5%, while West Texas Intermediate crude oil is up 0.3%. Peloton Interactive shares are surging now by 13.6%, the most intraday in 6 months, after CNBC reported that a number of private equity firms have been considering a buyout of the fitness company. Again, Peloton shares, they're advancing right now by 13.8%. Recapping, stocks higher, S&P now up 15, a gain of 0.3%. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Limes.
All right, Charlie Pellet with the latest on trading from New York. Thank you so much. Meanwhile, here in Washington, we're awaiting the latest from Capitol Hill after the second meeting in as many days between the Speaker of the House, Mike Johnson, and Congresswoman Marjorie Taylor Greene of Georgia, who, of course, has threatened to act on her motion to vacate the Speaker as soon as this week. Before the meeting that was scheduled for 12:30 p.m. today, she said she's clear in what her demands to Mike Johnson are. She would like to see the Hastert rule followed, which means a majority of the majority must support any bill. She wants no more funding for Ukraine, to defund the special counsels who are looking into former President Donald Trump, and avoid a shutdown before the election by passing ACR to automatically enact a 1% spending cut. The question is, what leverage does the Congresswoman have over the Speaker? Is he likely to agree to any of this, especially when Democrats have said that they will act to table a motion to vacate if indeed it is brought forward? So we want to get reaction to all of this now from inside the Republican conference. I'm pleased to say joining me here on Bloomberg Television and Radio live from Capitol Hill is Congressman Byron Donalds, the Republican from Florida. Congressman, welcome back to Bloomberg. It's great, as always, to have you. What is your understanding as to what could go down in your chamber in regard to this motion to vacate in the coming days?
Well, I think what's likely is that the motion will be tabled by large amounts of the Republican conference, and from what we're hearing, members of the Democrat conference. Look, at the end of the day, there have been questions from many conservatives about a lot of the bills that have passed on the House floor, where a majority of Democrats have been voting for those measures. But I believe that right now, going through a battle for the speakership is not in the best interest of the Republican conference or in Congress overall. So I think at the end of the day, it's going to get tabled, and then we're going to move on. We're going to move on to the appropriations process for the next fiscal year.
Congressman, is this so much about Democrats being willing to protect the House Speaker, which may be the thing that keeps him with the gavel in hand, or about the support from former President Donald Trump? To what extent does he influence the outcome here?
I think President Trump has made his views known that he doesn't want to see the House go through this motion to vacate process right now. So I think right now you have a lot of people up here on both sides of the aisle who just want to basically get to the election season and let the American people have their voices heard about which way they want Washington to go. Do we want to continue to go down the line of the crazy agenda of Joe Biden and the Democrats that's led to massive open borders, massive inflation, on the verge of World War III? Or do we want to go back to Trump-era policies which actually improved wages in our country, kept inflation low, led to a more peaceful planet across the board, and actually secured our nation? And so that's the conversation I think every member on Capitol Hill wants to have. I think we're probably going to get to that. We're definitely going to get to it. I think the motion to vacate is probably going to get tabled in the process.
Well, Congressman, you just mentioned there the border, which, of course, is something that your conference has focused immensely on and passed H.R. 2, though with no Democratic support. Never got the chance to vote on that bipartisan border deal that was reached between Senate negotiators and the White House. President Biden has, though, expressed interest in doing something on the border legislatively, trying perhaps that effort again. Do you expect you will have a chance to vote on something else before the election?
No, I don't, because what Joe Biden wants to do is play politics with the issue of securing our nation. Even the border bill that was in the Senate, that was pure politics. The Senate didn't even bring it up for a vote. That's how toxic that bill was. And so the reality is that what Joe Biden wants to do is give a fig leaf, give a patina to the American people right before the election to demonstrate that he cares about securing the border. The truth is he does not. He never has, because if he cared about border security, he would have worked with Republicans at any point over the last 18 months. He has refused to do that. And over the course of his entire presidency, we've now seen anywhere from 8 to 10 million illegal immigrants come into the United States. So he doesn't care about the border. He uses it for his own political gain. And now he wants to do something right before the election because his poll numbers suck because he's been worse at his job.
Well, of course, he had been working with one Republican, at least Senator James Lankford, who helped negotiate that bipartisan border deal. But moving on, Congressman, there is another issue with which the president has been grappling. In fact, he is on Capitol Hill today. I understand you weren't there at his remarks, but he did give an address on anti-Semitism. It's talking about how there is a freedom to free speech in this country, not, though, room for hate speech or violence on college campuses, given what we are seeing across the country, including schools like GW, where I know you yourself visited here in Washington. What else would you like to see be done to address this issue? Is the speech itself enough?
No, the president's speech is not enough. It's 9 or 10 days too late, but why are we surprised? Joe Biden is no leader. He's late to every crisis that faces our country, including the rise of anti-Semitism from the radical Democratic left. So, no, the speech is simply not enough. What we should be talking about right now is the fact that you have students whose civil rights have been violated. So these schools, which do not take campus security seriously, we should be invoking Title VI of the 1964 Civil Rights Act, and we should be defunding these institutions if they're not going to protect the civil rights of students. It's that simple. And this goes back very clearly. If you go back to the Civil Rights era, the reason why Title VI was put into the Civil Rights Act is because you had black students whose civil rights were not being protected on college campuses. So if it was good enough then, it should be good enough now.
Well, Congressman, when we think more widely about what many of these protests have emanated from, obviously it is the ongoing conflict between Israel and Hamas in Gaza, where we have seen tens of thousands of Palestinian lives lost. There are questions now as to whether or not Israel will be moving forward with a further ground invasion into Rafah, potentially resulting in more loss of civilian life. Would you be supportive of any alteration to U.S. policy toward Israel if Israel were to do that when the administration has warned against doing so, conditioning aid, for example?
No, I don't think we should do that. This is something where Hamas committed a disgusting atrocity against the people of Israel on October 7th. And so what the United States government should do is stand behind its ally. If Hamas refuses to surrender, that is because Hamas is a terrorist organization that literally hides behind women and children in Gaza. They would prefer to see Palestinians die so that Hamas can live. I know that's very strong language for your network, but that's the truth of what's happening overseas. And so Hamas should have surrendered long ago. The only reason why they haven't surrendered to this point is because they are getting political coverage from a lot of news stations around the world and from the radical left in the Democrat Party, who continue to give them cover. When it comes to the Palestinians in Gaza who have died in this conflict, nobody wants to see the loss of life. But when you have Hamas hide behind women and children, using them as human shields, there is going to be loss of life. And they do that for one very important reason. Hamas hides behind women and children because they believe that Israel will weaken and not follow through with eliminating Hamas. But Israel's resolve is high. They should continue the incursion into Rafah as we speak. They should not stop from doing that, because if you let Hamas hide behind women and children and then rebuild themselves by sending aid over there, which, by the way, Hamas right now is stealing the aid for their own purposes from the Palestinian people. If you allow them to survive, you're only going to invite more attacks in the future. I think Israel's doing the right thing. They should proceed forward. And the White House, led unfortunately by Joe Biden and the Secretary of State, Mr. Blinken, they should stand behind our ally, not behind Hamas.
Well, Congressman, do you not think the White House has done that to this point, considering we have not seen conditions put on aid, and we have heard many times expressed by Biden and other officials within the administration that the U.S. alliance with Israel is ironclad?
Listen, we've heard the words from the Biden administration, but when you go into where they've been talking with the Israeli government behind closed doors, what you've seen is them putting pressure on Israel, trying to get them to change the battle plans that the IDF is going through right now. They've been saber rattling to Israel, saying that there are certain conditions that the United States wants to see and how they proceed in this conflict. That is not the appropriate response from our government. That is a cowering response from our government, which is sad to see, because at the same time, you have the Biden administration is back channeling to the Iranian regime, trying to cut a new Iranian deal with that regime. And we all know that the Iranians are the backstop for Hamas. Hamas is a puppet regime of Iran. And so when you have Tony Blinken and President Biden going behind closed doors to back channel to the Iranians and then also to limit what Israel can do, then I would tell you no. The speeches might sound good, but what's happening in reality has not been good and not supportive of Israel.
Congressman, your displeasure with the way that this president has conducted himself in regard to this conflict is well noted. I would like to ask you, though, about the former president with whom I know you have a close relationship. I'm sure this will come as no surprise to you that your name has come up quite repeatedly in terms of who may potentially be Donald Trump's vice presidential candidate, join him on the ticket come November. What conversations have you had, if not with him, with others on his team about that?
There's really not been any conversations. I think everybody's aware of kind of what the short list is, to use your language. But what we're focused on is making sure that the Trump campaign is in the best position possible to retake the White House this November. Look, whatever President Trump decides to do when it comes to the vice presidency, I'm going to fully support, because I just want to win and get our country back on track. We have an amazing country if our leadership is actually smart and gets out of the way of the American people. I think 4 years ago, the American people were lied to. Joe Biden said that the adults were going to be in the room and the adults are going to come back to Washington, D.C. But what we have seen in the last 3.5 years is the most disastrous policy, both domestically and on a foreign policy basis, our country has ever seen. Joe Biden is the master of disaster, and he needs to go. Whoever the vice president is, that'll be fine. President Trump's going to make that decision. I will support that. But we got to get our country back on track. The American people deserve no less, and our allies deserve no less.
All All right, Congressman Byron Donald, the Republican from Florida, thank you so much for joining us on Bloomberg Television and Radio live from Capitol Hill. We appreciate your time, sir. And we want to get a bit of reaction now from our political panel. I'm pleased to say Jeannie Sheehan Zaino, Bloomberg Politics contributor, is joining me alongside Republican strategist Lester Munson, co-head of the international group at BGR. So, Lester, if I could just first go to you, obviously a lot of criticism of the Biden administration dealt there by Congressman Donalds. At the same time, while Biden is navigating the situation with Israel, Donald Trump is spending his days, including today, in court in New York. When a voter is considering these two choices, potentially disagreements over policy versus something about character, what will win out in November?
What a wonderful question. I don't think we know yet. This is a pretty close election. I think Mr. Donalds just demonstrated why he's on that list. That was a lot of forceful messages, master of disaster, as he called Joe Biden. He would be a great, just objectively, if you're looking for an attack dog vice presidential candidate, he would be terrific. He hit all the marks. Those messages resonate with Republicans. That's going to help Donald Trump, who might be trapped in a courtroom for the next few months, either in New York or in Florida or D.C. He's going to be trapped in courtrooms. Byron Donalds is one of the people who could be out there, bringing the attack on behalf of the former president. I thought that was pretty effective.
Well, Jeannie, when you consider what exactly the attacks were, everything from the way that he has conducted his Israel policy to the way that he has handled the situation on the U.S. border, are these not two issues that are actually among perhaps the highest ranking in terms of what's going to be weighing down Joe Biden's reelection effort?
They are. And the third one, of course, would be the economy and inflation. And so he did hit those talking points. Unfortunately, the veracity of some of what he said was not something that many people who have looked, for instance, at the Jim Lankford bill on border security would agree with. He talked about it as if it was, Joe Biden's bill, uninterested in border security. Well, you asked Jim Lankford, you asked the Wall Street Journal, this conservative editorial board, they described it as the most conservative security bill, not an immigration bill, that we had seen in 100 years. And so, of course, it was the House of Representatives, the Republicans, who punted on that because it wasn't in Donald Trump's interests as it pertains to the election in November. He didn't want Joe Biden to get a win on that before the election. So, yes, is he making good talking points on behalf of Donald Trump? Absolutely. But when it comes to governing, big questions have to be asked. Just going back to the issue of Israel, for instance, I listened to Joe Biden speak carefully. He talked about an ironclad commitment to Israel, and I'm not sure how that could be questioned at this point.
All right, Jeannie Sheehan Zaino, Bloomberg Politics contributor, and Lester Munson of BGR Group. Wish we had more time with you both today, but thank you so much, as always, for joining me. We'll have much more coming up here on Balance of Power, including in just a few minutes an interview with the Minneapolis Fed President, Neel Kashkari, live from the Milken Institute Conference. So stay tuned for that conversation coming up on Bloomberg Television and Radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, the NASDAQ Composite Index, and yes, the Russell 2000 all advancing. S&P right now higher by 0.3%. Best level of the day now, up 16 points on the S&P. Dow Industrials up 72. That is a gain of 0.2%. NASDAQ Composite Index up 34, higher now by 0.2%. 10-year 4.44% with a 2-year yielding 4.81%. Spot gold lower by 0.5%, 23.13 the ounce. West Texas Intermediate crude oil up 0.6%, 78.95 a barrel. Disney having its worst day in 18 months after earnings, down 9.9%. Also after earnings, Palantir down by 14.7%. Balance of Power continues now from Washington. Back we go once again. Your host, here she is, Kayla Lyons.
All right, Charlie Pellet in New York for us today with a check on the markets. Thank you so much. I am Kaylee Lyons in Washington. Joe Matthew taking a day off today. We've got you covered all across the East Coast from New York to Washington and the West Coast as well. And that's where we go next, out to California, where the Milken Institute Global Conference is taking place. Romaine Bostick and Carol Massar are there, and they're joined now by a very special guest, Minneapolis Fed President Neel Kashkari. Carol, Romaine.
Thanks, Kelly. We are sitting here right now with Neel Kashkari, president of the Minneapolis Fed. There's been a lot of talk about how persistent inflation has shown itself to be. You were pretty early on, at least among Fed members, of saying, don't get too ahead of yourselves in talking about cutting rates. A lot's changed, at least from the data that we've gotten over the last, 3 months or so. Has that changed your view as well about staying where we are?
Well, the second half of 2023 surprised us at how rapidly inflation fell. That was really good news, and the economy remained strong. We all hoped that was going to continue. The first quarter of this year, it seems like it's stalled out. So it's a little too soon to declare that we're definitely stalled out, or maybe it's just taking more time. I think we're in a good place right now. Labor market is still strong. We can take our time to get more data to see if disinflation is going to continue, and if it does, great. If it doesn't, then we need to take that on board.
What is the complexion right now of disinflation? What actually drove us, at least down to the level where we're at right now?
Most of the gains that we saw last year were supply side improvements. Supply chains getting better, Americans coming back to work, a lot more workers entering the labor force. That's really positive. I don't think monetary policy actually brought demand down that much. And so most of the gains were because of the supply side. Now the question is, if monetary policy has to take us the rest of the way there, is it tight enough to do that? I wrote an essay today on our website raising that question, and I'm not sure how tight monetary policy is. We need more data to assess it.
How do we know that the disinflationary process has still some ways to go? Or how do we know that maybe this is it? This is the new normal?
Well, it's not the new normal because it's 3%, and the Fed can and will achieve 2%. The question is, if disinflation is still underway, then maybe it'll continue on its own, and we can then take that on board. If we need to hold rates where they are for an extended period of time to tap the brakes on the economy, or if we even needed to raise, we would do what we need to do to get inflation back down.
I have to just ask you, though, about 2%, and I know why the Fed stands by that 2%, but I talked to people around the room this week here, and their cost of capital, they're basing that more on closer to a 3% rate. And the idea is they're saying, look, the 2% target, that needs to come up. That's not the reality long-term structurally, and at least not for the folks in this room.
Yeah, I disagree with that. Yeah. I mean, I think that ultimately the central bank, whether it's the Fed or the ECB or the Bank of England, can determine whatever the inflation rate is. And over time, if they conduct their policy appropriately, people will come to understand that, will adjust their behavior. We're committed to 2%. We will get to 2%. And we will get an interest rate environment necessary in order to achieve 2%.
You know, one of the arguments, though, Neil, is that the idea of nearshoring, bringing things back home, building chips in America, that's going to they're going to be more expensive than if we were building them overseas. And that is going to be, consistent inflationary pressures longer term. There are some macro forces underway. Why not think that it's got to be above 2% longer term?
I think those trends are real, but those would suggest to me a one-time increase in the price level, not necessarily an ongoing increase of inflation at a higher level. we believe, and I believe, that the monetary authority can ultimately long run determine the inflation of the economy, but the rate environment necessary to achieve that may be different depending on these broader macro forces.
So rate cut this year, should we take it off the table? Is it still a possibility?
It's certainly still a possibility. We need to let the inflation data tell us. I mean, I think my colleagues and I, we all have a range of views on where the economy is going, but we're all committed to letting the data guide us. And if the data comes in a positive manner suggesting disinflation continues, we'll adjust.
Go ahead.
But is it just housing pressure? Like, you write a lot about housing pressure. We talk about it. We're talking with a lot of people in the real estate sector. There's not enough supply of houses out there, and that's creating inflation on the housing front. Is it just housing pressures that you guys are really focusing on, or that you're focusing on?
I'm focusing on housing, first of all, because it's traditionally the most interest rate sensitive sector of the economy. And if the most interest rate sensitive sector is not showing as much disinflation as I would have thought, for example, new lease rates appear to be climbing back again.
Yeah.
That's surprising to me. Why is that? That makes me wonder, is policy as tight as I would have otherwise assumed? We are seeing some effect of monetary policy on credit card delinquencies, on auto loan delinquencies, especially for lower credit score borrowers. So it is having some effect, but it's not having as much effect as I would have guessed by now.
I know we have the benefit of hindsight, but you go back to when the rate hiking cycle effectively paused. Do you think that the Fed should have kept going with hikes, meaning additional hikes?
I don't know. I mean, I think that there are lags in monetary policy, and we saw such rapid disinflation in the second half of last year. I mean, it was a really wonderful scenario. That was real, and that surprised us. And so it's reasonable to say, let's just let that continue. Maybe it'll take us all the way home. It ended up stalling out, at least for a little bit.
Do you feel like you can accurately assess those lags, what those lags are? Because even when you talk about disinflation, you acknowledge yourself, a lot of that is driven by supply side issues and not just monetary policy. How do you assess what the balance is?
Yeah, it's hard.
Yeah.
You know, for example, in the housing market, which we're talking about, we know a lot of Americans refinanced their homes when the mortgage rates were very low. And so they're not feeling the pinch of higher rates because they have not had to refinance. And so that happens. That happened in the late 1970s and early 80s as well. That's part of the lag in the policy process. So we have a lot of data that we look at, and we ultimately have to use judgment to try to put it together.
Speaking of data, growth, we're doing okay. Jay Powell consistently reminds us this is a good thing. We hear it, we feel it here at Milken. Is there the possibility that you don't even have to cut rates at all this year because the economy is strong?
Well, no, you're right. So if inflation moves sideways, and if the labor market continues to be strong and growth continues to be strong, then I would be in the camp of we shouldn't do anything. Just let this play out for an extended period of time. If, on the other hand, we start to see inflation come back down or meaningful weakness in the labor market, then that might say we need to start dialing back. Or if inflation proves to be more entrenched, we could have to go up.
Yeah.
But is the economy, is it strong for everyone?
Well, no, it's of course not. And we know that the way policy works, it slows down parts of the economy, and the lower income workers tend to feel the pain the most. And that's, I mean, I wish that were not the case. It's also frustrating that every time there's a piece of good news, you see Wall Street rally, euphoria returns to Wall Street, and yet there are people who are feeling the pain. So it's definitely uneven how this gets felt.
You did mention, though, if inflation starts to go up, I thought I heard you say we could have to increase the Fed. That's a smart narrative still to have out there, that the Fed could possibly have to raise rates again?
Well, of course. I mean, we are data dependent. We are committed to getting inflation back to our 2% target, and we will do what we need to do. Nobody has taken any rates completely off the table. I think the bar is high. Much more likely we would stay put for an extended period of time, and then we'll see where we are.
How would you actually prepare, though, the markets for that? That's not the kind of thing you just want to go into a meeting and surprise the markets on. I mean, you need a little build-up there.
I agree, but there's no shortage of Fed
like
communication.
Right? There is
no shortage of Fed
there
communication to signal when people's perspectives are changing.
Is that Fed communication, though, do you think it's fair? And by that, I mean, is it too much? Because you get so many differing opinions, and in the media, it's great. We love it. But I feel like for investors, sometimes it feels like, okay, we're getting too many people telling us.
I understand their concerns. Yeah. There are 12 reserve banks. We represent regions of the country. So people across the 6 states that the Minneapolis Fed represents want to hear from us often. I turn down 95% of my speaking invitations that I get. So I go out across the district. I'm usually saying the same thing, but in the spirit of transparency, I live stream it so that I'm not giving any secrets away. And if people want to watch it and cover it, I can't control that. And so it's a balancing act where we want to be transparent to the constituents that we represent, and yet we also want to show that we're not giving secrets away.
President Kashkari, I feel like there is more clarity of thought about what the Fed may do next, certainly here at Milken this year around. But having talked to you, we could cut rates, we could raise rates, you're data dependent, I get it. Do you at the Fed and the FOMC feel like there is more clarity about kind of where we are in the economy and where the trouble spots are?
Well, I think there's more clarity on our reaction function, which is we are all committed to watching the data. Our models have not worked very well in the last few years, so we have to watch the actual inflation data. That will guide us. We all agree on that. Now, whether inflation goes sideways or continues to fall, we have a range of perspectives on that. That's where the deviations lie. But our commitment to doing what we need to do, there's no deviation around the table on that.
Are you still paying a lot of attention to financial markets and how they're reacting to
Absolutely. I mean, it is a channel through which monetary policy affects the real economy.
Yeah.
And when, it took 3 negative inflation prints in a row, markets started to take that on board, and then 1 positive job report, and euphoria returns.
All right.
Oh, I guess we have to go.
Yeah, we got to wrap. You don't see all those people in the background, Carol. Like that means wrap. Neil, always great to talk to you.
Great to see you. Thank you.
Neil Kashkari, Minneapolis Fed President, live here at the Milken stage. Let's throw it back to Keely and the team over at Balance of Power.
All right, Romaine Bostick and Carol Masser sitting down with Minneapolis Fed President Neil Kashkari live at the Milken Institute Global Conference. Thank you so much. Great interview. Neil Kashkari saying that a rate cut this year certainly is still a possibility. Of course, President Biden has said he still expects a rate cut to come this year as well. We have much more ahead here on Balance of Power. First, though, we want to get a check on world and national news with Amy Morris in our 99.1 newsroom here in Washington. Hey, Amy.
Hi, Kaylee. Israeli forces took control of the Rafah border crossing in Gaza ahead of a possible assault on the city. It's the first time Israel's army entered that part of Gaza since the war with Hamas started back in October. The development came a day after Israel told residents in parts of eastern Gaza, Rafah, to leave immediately. President Biden condemned the ferocious surge of anti-Semitism in America and around the world during a ceremony today to remember the victims of the Holocaust at a time when the Hamas attack on Israel and controversy over the war in Gaza has sparked new waves of violence and rhetoric toward Jews. Biden's remarks at the Capitol played out as pro-Palestinian protests continue to rock college campuses across the country. And adult film actor Stormy Daniels has been on the witness stand for 2 hours in Donald Trump's criminal hush money trial, but now they're on a lunch break. Before the break, she told the court about her background and how she got started in the adult film industry. And she explained how she first met Donald Trump at a celebrity golf tournament when she was 27. Now, his legal team is already objecting to any graphic testimony by Daniels. Prosecutors say they may need that to establish Daniels' credibility and how she came to have an affair with him. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
140 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the S&P 500 index edging closer to 5,200 right now at 5196. The S&P up 16. We're off session highs, but still up 0.3%. Dow Industrials up 68 now, up 0.2%. NASDAQ up 36, a gain also of 0.2%. 10-year at 4.44% with a 2-year that's yielding 4.81%. Gold down $7 the ounce, down 0.3%. Right now, gold is at $23.16 the ounce. And West Texas Intermediate crude up 0.5%, 78.85 for a barrel of WTI. Bottom line here, a comeback in the U.S. stock market. It is extending now into a 4th straight day. TikTok is suing the U.S. government in the first challenge to a new law that would force Chinese parent company ByteDance to divest itself of the popular video app or face a ban. And Kenvue shares are higher after the consumer health company announced plans for a roughly 4% reduction in its global workforce, all part of an efficiency plan designed to make it more competitive. Kenvue shares, they're advancing now by 6.4%. Recapping, a rally underway again today with the S&P now higher by 15, up 0.3%. Balance of power continues. Back we go to Washington. Once again, here she is, your host, Kaylee Lyons.
All right, Charlie Pellet with a look at the market action today. Thank you so much. I'm Kaylee Lyons in Washington. Joe Matthew is off today. Welcome to Balance of Power on Bloomberg Television and Radio, where the markets, of course, are trading all day with no break. There is a break, however, up in New York in the trial of Donald Trump. The criminal hush money trial, that is on the lunch break until the end of this hour. But before that break started, we got multiple hours of testimony from porn star Stormy Daniels, who, of course, has been in focus in this case as she was the recipient of this $130,000 hush money payment that prosecutors allege was intended to influence the results of the 2016 election in Donald Trump's favor. And, of course, that the payments to Michael Cohen, the fixer who made the payments to Stormy Daniels, were misclassified improperly as legal fees, thus the charges of falsification of business records. We want to get more now with June Grosso, who, of course, is the host of Bloomberg Law, has been following this trial incredibly closely. So, June, it's unclear what else we'll hear from Stormy Daniels when the lunch break returns, how much longer she could be on the witness stand. Have we gotten, though, all of the details that really prosecutors likely wanted to get at from her?
Well, it's hard to know because I don't know what else they have that she could testify to. But the most important thing, and she's talking about it now, is the hush money trial. And they certainly have gotten into that. Also, I think what's important for prosecutors is, the jurors have been hearing Stormy Daniels through this whole trial. They want, the jury to meet Stormy Daniels and also to talk about the sexual encounter she had with Donald Trump, which she recounted in great detail. And what they want is to show the jury why Donald Trump wanted to keep this so secret, desperately, didn't want it coming out before the election. And when you hear some of the details she gives, you can imagine that this is something that someone running for president would not want to be out there. I mean, he said things like, first of all, he asked her a lot of intimate questions, and he said at one point, "You remind me of my daughter." So this whole scenario is unsavory, and that's putting it mildly, and it's a good reason for Donald Trump to want it to stay out of the public eye.
Yeah, well, when it comes to some of the detail, of course, the judge had previously ruled that not all of the sexual detail needed to be borne out by Stormy Daniels on the witness stand, though certainly she did get into some of it, but
did.
more.
She got into a lot of
things
it
like positions.
Right, because she talks so fast. From everyone I've been hearing, she talks so fast that it comes out before, and then it's too late. And the defense hasn't been objecting that much, but you got a lot of detail. I don't know what other detail she could have really talked about. So I think that the judge, I understand that he was none too happy, and this is a very even-tempered judge. Not much gets him, concerned, but he was unhappy about this thing and sounded as if he was losing his temper a little bit.
So, of course, the detail of the actual sexual encounter, June, is one thing. The detail on the actual NDA and the payment is another. Before the break, we did hear Daniels talking about that non-disclosure agreement. She said it was intended to keep information secret. She was asked by the prosecutor who the beneficiary of the NDA was. She answered Donald Trump, adding that it was arranged by Michael Cohen. She went on to say she had wanted the deal done by October 14th, prior to the November 2016 election, because she was afraid if it wasn't done before the election that she would not be safe. And she reiterated that the deal was for $130,000, that she could not tell the story and he could not contact her. Of course, another name, though, has come up in that testimony from Daniels, which is Michael Cohen, June, who we have yet to hear from. How could her testimony and his ultimately be attempted to be pieced together by the prosecution?
Well, so a lot of the witnesses that we've heard from up until this point from the prosecution are there to buttress what Michael Cohen is going to testify. You know, as I've said, Michael Cohen comes to the courtroom with a lot of baggage, a lot of ways for the defense to attack his testimony. I mean, we could count the many ways. So he is a witness whose credibility has to be bolstered by the prosecution. And they're going to do that with documents, but also with some of the testimony. For example, the testimony that she's giving about how Michael Cohen set this up and how she was afraid she wouldn't get paid before the election. And, you know, we have that whole thing about how Michael Cohen was trying to get the payment and finally had to put it up, you know, but with an equity loan on his own home. So all these little things are going to be brought together by the prosecution, or at least they hope it'll be brought together in one big piece where the jury will say, well, he has his problems. He has a lot of problems. You know, he perjured himself and all this, but he's backed up by all these witnesses and by all this paper that we have here. So I think that's what the prosecution is attempting to do with her testimony. But also, as I said, you know, they're also getting in a lot of sort of details about Donald Trump that might disturb some jurors because they come off as sleazy. So who knows what the jurors are thinking at this point?
Yeah, of course, I will wait and see ultimately how this jury rules, whether or not, or decides he's convicted or acquitted. The prosecution has said it does expect it could be calling witnesses for another 2 weeks. So it could be weeks still until this whole affair wraps up. June Grasso, host of Bloomberg Law, thank you so much, as always, for your expert insight and analysis as to what exactly is happening in the courtroom in New York. And of course, what happens in this trial in New York has broader ramifications, considering this is not just a former president, Donald Trump, on trial, but current presumptive Republican nominee who is actively campaigning to once again sit in the Oval Office. So we want to talk now more about how this case factors into voter opinion as we get closer and closer to that vote in November, and bring in Cliff Young. He is U.S. Public Affairs President at Ipsos and is joining me here in our Washington, D.C. studio. Cliff, always great to see you. Thank you so much for coming back to Bloomberg. If we just start with the impact of this trial, or potential impact ultimately of the verdict, if Donald Trump is convicted, and then depending on potentially whatever the sentence is after that conviction, how does that impact his odds of winning in November?
Well, first and foremost, we don't know because it is the future and they're sort of extraordinary events. They're not events that we can sort of compare to in the past. We don't have a database of convicted former presidents that we can draw from. But we do test things. We experiment on these sorts of issues in our polling. And what we do find is a conviction, and more importantly, a conviction and prison time, has an effect on the margins, that it basically sort of rattles moderate Republicans. They sort of migrate to undecided. That doesn't mean they wouldn't come back again if the messages were right. But without a doubt, this sort of event probably, like I said, has an effect on the margins.
Is that more that would-be Trump voters would be more likely to gravitate towards, say, an alternate choice, a third-party candidate, or that they actually would then go out and vote for Joe Biden? Because there is a difference there.
I don't think there's any sort of world where a Trump voter would decide not to vote for him and then vote for Biden. There's a likelihood that they migrate to a third candidate, RFK as an example, but more than likely they would not vote at all. They just stay home and just wait for the next election.
So ultimately, Cliff, a lot of this is probably not about that base Trump voter who would be voting for him no matter what, or certainly not voting for someone else who isn't him, versus a base Biden voter who is already committed to voting for the Democratic candidate. It's about that basket of undecided. And I just wonder how big that basket realistically is, and whether or not we're talking about that undecided group potentially growing larger because of issues like this or others, that more people become persuadable.
Yeah, this is in a very uncertain electoral cycle. So already from the get-go, we have between 50 and 20% of the population, depending how we ask the question, unsure about their answer, about how they would vote. This obviously increases as the legal troubles sort of expose themselves over time. They hurt Trump specifically. I think it probably translates more into not showing up and voting than somehow someone changing their vote and voting for the other side. But obviously we will see.
Well, on that note of really ultimately it being about who turns out and actually decides to cast a vote in November, you did some polling with ABC that came out just a few days ago that did suggest, looking at the headline of just, American voting age people, Donald Trump is leading. When you narrow that basket to likely voters, it's Joe Biden that is ahead. So how should we be thinking about the turnout element of this, and ultimately when we're seeing Donald Trump leading consistently across national polling, swing state polling as well, including our own here at Bloomberg, how turnout is ultimately going to factor in whether he's as strong with people who are actually going to show up?
Yeah, we have to be very careful right now looking at sort of likely voters, that is those who are going to show up on Election Day or vote in the election. It's fuzzy at best. We're 6 months out. But it is suggestive that Trump has a lot of voters on the ledge, on the fence. There's uncertainty about him. There's uncertainty because of the legal troubles, and frankly because of many of the sort of related sort of issues. That could work itself out over the course of the electoral cycle. But today, when you look at likely voters, they like Biden more than they like Trump.
Well, Biden has his own share of issues, though, as well. While Donald Trump has legal problems, we saw Joe Biden's perhaps on full display today when he was at Capitol Hill giving a speech on anti-Semitism, as we're seeing college campuses across the country roiled by protests, many who are unhappy with his handling of his policy toward Israel, given the high civilian death toll in Gaza. How much is that going to influence, more so than other issues like the economy or immigration, voters who are deciding whether or not to show up in November for Biden?
Yeah, I really think that Gaza and Israel is a false negative, let's call it, for Biden. It's not the issue. The real issue is actually inflation. And younger Americans are really hit by high price levels, like minorities as well. When we look specifically at the data, we put sort of Gaza on the one hand, inflation on the other. Across all demographics, inflation wins out in terms of the number one issue, the number one worry. And that's really a Biden's Achilles heel today. It's inflation.
Well, you mentioned young people specifically, who of course have really been at the heart of a lot of this protest activity. And so to hear that maybe it is perhaps more about the economy for them than other issues, your point is well taken. Yet in the primaries, the Democratic primary, we have seen across a number of states, Michigan perhaps most predominantly comes to mind, given its importance as a swing state, of primary voters choosing uncommitted or something to that effect. It's different language depending on what state we're talking about, but actively choosing not to vote for Joe Biden in the primary. Are you saying that that protest vote over Israel policy is limited to the primary, isn't likely to be as much of a factor in the general?
Now, I was saying that inflation is more important.
Okay.
And to understand sort of where younger Americans stand, it's really about inflation. It's not about Gaza and Israel. That's not to say that you can't have a specific effect in a specific state. We know all these elections are very, very close. That's not to say that, once again, on the margins, that the issue can't have an effect. But when looking overall, it's really about inflation today. Biden's problem is bringing those constituencies most affected by inflation back into the fold.
Would one of those constituencies include black voters? Because we've also seen some Ipsos polling with the Washington Post on the idea that fewer black voters say they're highly likely to turn out and vote in November this time around. I believe it's 12 points less than in 2020.
It's very worrisome. Indeed, it's not just black voters, it's Latinos as well. Those two constituency groups have been very important for Democrats, and they've been majorly hit by inflation over the last few years, and they're less enthusiastic in sort of their outlook in terms of voting for Biden than they were just 2 years before.
When we think about enthusiasm as well in many different states, and I mentioned one of them being Michigan, a swing state that we pay a lot of attention to. Typically, we look at, there's roughly 7 of these swing states that we think will be highly influential. We heard from down in Florida over this past weekend, Donald Trump's campaign at a donor event suggesting Minnesota and Virginia could also be in play, that their polling suggests Donald Trump might actually be able to win those states. What do you think about that, Cliff?
No, I don't think that's. I don't think that hits the mark. I think that Trump is overstated right now. Now, Biden is weak, and Biden has problems with his numbers, and that's something that the Biden campaign is going to have to worry about. But Minnesota and Virginia, especially Virginia, sort of turning. I don't think that's. When you look at the historical data, that's possible. Anything's possible, but I don't think that's the case.
Okay, fair enough. So maybe it is going to ultimately come down to just those seven.
I think so.
Seven states. To what the point, the polling now is showing that Biden is losing, if not in all of them, depending on the poll you're looking at, in the vast majority. But certainly there could be some room for that to change over the next 6 months.
Without a doubt, over 6 months, those things can change. We expect it to narrow. Historically, these states have shown differences of 1-2 percentage points. They're at 4 and 5, some of them. It's much too large, much too in favor of Trump. As the economy improves, we expect Biden to improve. Yes, but today, Trump wins in all the key swing states.
Of course, there's still a long way to go, so we'll probably keep having you back here on Bloomberg Television and Radio to talk about it over the next 6 months. Cliff Young, of course, is U.S. Public Affairs President over at Ipsos. Thank you so much for joining me here on the early edition of Balance of Power. I'll be back later on today at 5 p.m. Eastern Time for the late edition. In the meantime, a special edition of Bloomberg Business Week from the Milken Conference will be just on the other side. This is Bloomberg.
right, welcome back to day 2 of our special coverage from the 27th Annual Milken Institute Global Conference here in a very warm Beverly Hills, California. A mashup, once again, of 2 of your favorite programs. I'm not going to say which one is their favorite, but it is a mashup of The Close and Bloomberg Business Week. I'm Romaine Bostic.
I thought you were going to say 2 of your favorite talents, but I didn't want to go there. I'm Carol Massar, everybody.
That's Tim and Alex Steele. Is that?
Don't tell them. All right, we spent a lot of time yesterday talking to folks from the world of private capital. Today, we're going to expand things a bit with a broader cross-section of finance, including sitting right next to us, Carmen DeCivio. He's EY CEO. We're going to talk about some of the big changes in the world of consulting. I'm curious, though, what CEOs, what they want to know from him, right, and his team about what's top of mind for them.
A lot going on in that space, a lot going on in the media space as well. Byron Allen going to be stopping by to give us his thoughts here on that long shot bid for Paramount.
I'm really excited, too. We're going to talk a lot about real estate today. David Steinbach at the real estate investment giant Hines to talk single-family rental strategies. They have such a great global perspective, so curious to see what he has to say.
Katie Koch, CEO over at TCW, going to be stopping by, as is...
Wait, and they had some news yesterday.
Oh, yeah, that is right. We got a lot to talk about.
In the private credit space.
Show prep. All right.
Also with us, we're going to check in with Ray McGuire, president of the investment bank Lazard. So that's going to be pretty cool.
And then I guess I know that you've been really excited to talk about. You're really into this neuroscience stuff.
Yeah, exactly. Dr. Ali Rezai, he is over at West Virginia University Rockefeller Institute. 60 Minutes just did a piece with him, so fascinated to see what he has to say. And we're doing this on a day where we see the markets up again, S&P popping up above 5,200.
There's a lot more optimism. When we talk to people, there's a lot more optimism, whether it's in public markets, private markets, deal making, consulting.
Yeah.
Maybe?
Well, that's what we're going to find out.
Yeah.
Listen, we often talk with disruption or about disruption here at Milken, investing in business and technology. It is also happening, as Romaine just said, in the world of consulting, where firms have trimmed headcount, delayed start dates, and slowed the pace of hiring over the past year amid declining demand from their clients. So we have a great voice to talk about the industry and changes at his own firm and more broadly. Carmen DeCivio is global chairman and CEO of the consulting firm EY, here with us at Milken. Thank you so much for being with us.
Great being here. Great being here with both of you.
Let's start with the headlines. You know this industry. You started at the industry, at EY, out of college back in '85. The headlines, cutting workers. It feels like that they are pulling back in a big way. What is going on in the consulting industry?
Well, first of all, you got to step back a couple of years ago. We were all growing at above 20%. EY was growing above 20% in consulting.
Because of the pandemic and that part?
Well, there was some pent-up demand from the pandemic, but also there was confidence, low interest rates, which I'll get into, and companies were spending. Okay, now what's happened with rates going higher and there being uncertainty in terms of where rates are going, companies are holding back on spending. And it's a little bit more of an expectation versus where the rates actually are, because historically speaking, the rates are not that high, but the expectation was cut at a certain time period. So I think companies have been waiting and therefore not spending as much as they were. And that's caused a slowdown. It's an industry slowdown. We were growing well into the 24, 25%. Now we're growing in the mid-single digits.
How much is a cutback on the private equity side of things? You guys consult a lot of the PE firms. We talk to a lot of PE. Here, they are kind of finding their way forward. How much of the slowdown is a result of that?
Well, it is. Some of the slowdown has to do with transactions, whether it's PE or strategic transactions. There have been less of them. Obviously, the overall economy and rates have impacted that. When there's less transactions, a lot of our businesses are slower. Our transactions business, our due diligence business, even our tax business, and certainly consulting, transformations, integration, there's less of.
So volume is down. What about the size of deals that aren't getting done? Are those also lower?
They're also lower because obviously big spends, huge technology spends that are in the hundreds of millions of dollars, they're expensive. Companies have held back in terms of really investing the way they were.
What sort of, provides a boost to that space? Because we talk about interest rates. I mean, interest rates have been stable, relatively speaking, for the last year now, I guess, more or less here. And most people pretty much assume we're pretty much going to stay here, maybe some tweaks around the edges.
Yeah. So a couple things that will give it more boost. One is AI. So companies right now are looking at how do they deploy AI. We're at the very beginning stages of generative AI. So when people say, oh, AI's been around for 20 years and so forth, machine learning's been around for 20 years. Generative AI at the scale that it could be has not been around for 20 years.
business. So we look at AI in 3 different buckets, and this is the way we really have our clients look at it as well. First of all, you have to look at it at the strategic level. Your board, your CEO has to know what AI is going to do to your business. It can't be just your chief information officer. But we look at number 1 is how do we help our clients with AI? So that involves a lot of use cases in different sectors around the world. We have thousands of use cases that we're working with our clients. But these projects are small. We're getting used to them. The middle bucket is around how do you make your business better?
Right.
And that includes us as well. And that's around productivity.
You tried to make the business better by spinning off the consulting unit. It didn't happen. Are you disappointed in that it didn't work out?
I am disappointed, but the reason why we're doing it, the conflicts in terms of really unlocking value, is still there. So I truly believe we've learned a lot from that process. The profession overall has learned a lot. You've seen private equity now investing in accounting firms and consulting firms. They weren't before because they're seeing the cash flow and the value. And you're also going to see that going forward.
Carmine, I wonder, like going through your own restructuring and issues, if you will, at EY, does that help you in terms of working with clients? Or does it make them say, well, wait, you guys sound like you've got some stuff going on? Like, I'm curious about that.
No, it was incredibly helpful. We were going through this transformation, and we learned a lot, and we've changed a lot, even though we haven't done the actual transaction. But I was talking to CEOs that were going through transformations, comparing notes, helping each other during the entire process.
I do want to go back to AI because obviously that's been the talk of a lot, and specifically how companies build those AI strategies. The idea of do you build it yourself or do you just find another company that's doing it and buy them? What type of questions are you getting from clients about the best approach to take?
Well, I think companies right now certainly are looking at companies like Microsoft. Microsoft has this concept called Copilot, which helps in a lot of different areas, but it helps an individual in terms of their work every day and so forth. And so, you know, Microsoft's doing this at scale. Others are doing this at scale. We have an alliance with Microsoft. So it's really helpful to use others that have invested in this for those kinds of tools. A lot of companies are asking about developing their own large language model for their company using their data. We have one of those at EY. It's called EYQ. It's fantastic. Our people love it and so forth. But you have to have cleansed data to be able to do that.
Yeah, absolutely. And to start off, Carol gave away your age by saying when you started out there. But it was actually kind of fitting because we talk about these big... He did finish, yeah. He was an overachiever. But it gets to this idea of these big structural changes, right? You're on your way out as a CEO. You're handing over the reins in a couple of months, I believe, right, in July. Yeah. Here, what are you leaving your successor? I mean, what are the big issues that you think she's going to have to deal with that are going to be most important for to build EY?
So let me just go back for a second. When I became global managing partner, which is the number 2 role at EY, it was 2013. We were $25 billion in revenue per year, and we were about 200,000 people. We're $50 billion now with almost 400,000 people. So there's been tremendous growth in the organization. My successor, Janet Troncalli, she's an absolutely fantastic
First
leader.
woman CEO.
First woman global chairman and CEO of a Big 4 firm. And she will have a huge scale of a firm to run. And she will have to wrestle with what's the strategy going forward? Are the conflicts too great? Do we have to relook at transactions? Do we have to look at how do we create value, private capital being invested in the business? These are all things that not only her, but all our competitors are going to do.
You know, it's interesting. You talked about the growth of EY, but does it need to be leaner in some ways going forward?
It absolutely does, and it will be leaner because of AI. You know, technology will help it be leaner. We're looking at 20-30% productivity help as soon as we get all the technology in. And so it will be leaner. Our partners are asking for that. Technology will be a big help.
Is that technology, though, that's primarily doing a lot of the sort of more rote tasks? There's been a lot of discussion about entry-level jobs in this space, whether it's in consulting or investment banking, the types of tasks, rote tasks that were given to those new entrants. If AI or some other technology is doing that, what type of training are those folks, those new folks, going to have as they come into the industry?
They will have training in AI. They will have training in AI tools. We already do that. We offer many hours of training. That's one of the big advantages of starting at a firm like EY. It's training. Some people think it's the continuation of school. We train. If you look at corporates today and you look at finance functions in corporates, many people have had a start in one of the big four firms. And we really train the world when it comes to finance, accounting, auditing, and so forth.
Armando Civio, thank you so much. We really appreciate it. Good luck with all that is to come from you.
It's great being here with both of you. Thank you.
Really enjoyed it. The CEO of EY joining us right here at Milken. All right, a lot going on here and a lot going back in New York headquarters, and a lot in terms of the market. So let's get an update on the trading day in New York. Here is Tim Stennebeck.
Hey, good morning, I guess I could say to you guys for about 50 more minutes. We are seeing stocks lose a little bit of steam. Yields are lower across the curve as we check in with the S&P 500, the NASDAQ 100, and the Dow Jones Industrial Average right now. Dow right now is higher by about 5. Well, let's go ahead and round that up to 0.1%, as is the S&P 500. We can go ahead and call that 0.1%. As I mentioned, stocks moving a little bit lower just in the last half hour or so. NASDAQ 100 just down fractionally. S&P 500, if it does finish in the green today, it's its longest winning streak going back to March. Today, led higher by mega cap tech companies. The rebound in risk assets that we've seen in general over the last week, really driven by two things. A rates reset following a Fed-friendly jobs report, and the most recent Fed meeting, better than expected earnings. Speaking of earnings, we're seeing some big equity moves today as a result of Disney. As a result of earnings, I should say, chief among them, Disney. Look at this, Disney down close to 10%, falling the most in a year and a half after the company reported a not-so-great outlook for growth in Disney Plus subscribers in the current quarter, and also said that visits to parks are expected to moderate from peak post-COVID levels. Remember, Bob Iger, he's in the midst right now of this years-long effort to reorganize Disney. In the age of streaming, the company's losing subscribers to cable TV. He's been under pressure from activist investors. He's aggressively cut costs. He's propped up ESPN. He's pumped new life into Disney Studios after some big box office misfires. I also wanted to check in on shares of Apple. They're higher by 0.5 percentage point right now. This after the company announced a larger version of the iPad Air. It's aiming to reinvigorate its iPad lineup. It's gone without an update going back to 2022, and this is the first redesigned version of the iPad Pro going back to 2018. The new model's thinner, includes a crisper screen. It's got a faster M4 chip that can handle AI tasks. Finally, Tesla. Shares of Tesla also lower. A couple of pieces of news on the stock today. Chief among them, though, the company's facing increased federal scrutiny of autopilot. The National Highway Traffic Safety Administration looking for info that will help determine whether the company's biggest ever recall made its driver assistance system safer, down by 3.5% right now, dragging down the NASDAQ 100 and the S&P 500. NHTSA opened a recall query last month after 20 crashes occurred in vehicles Tesla tried to fix with an over-the-air software update back in December. Well, coming up, we got Byron Allen, the founder of Allen Media Group and Entertainment Studios, joining us from the Milken Institute Global Conference. This is Bloomberg.
Earnings season is here.
This is a get out the popcorn moment.
Across the board, just pummeling of expectations. Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey, folks, we've got Microsoft. Apple earnings crossing the wire.
Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
A lot still to come.
With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment?
I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to our live coverage from the Milken Global Investment Conference in Beverly Hills, California. Romain Bostic here alongside Carol Masser, and now alongside Byron Allen, who founded Allen Media Group and Entertainment Studios in the 1990s. He expanded it from a few late-night syndicated programs to ownership of more than 3 dozen broadcast network affiliates, a dozen individual properties, including the Weather Channel, as well as digital news platforms like DeGrio. He's recently added a movie distribution company and has gone public with proposals to buy local TV giant Tegna in 2022, a pitch to buy ABC and Disney assets in 2023, and this year, interest in bidding for Paramount Global. Byron joins us right now here from the Milken stage. You're always bidding on something, Byron.
As a matter of fact, I'm going to bid on this flower on your lapel right now.
Well, my wife thanks you.
Okay, I'm thinking $1 billion. What do you think?
I'm going to say $30 billion.
Okay, I'm out.
According to Bloomberg Intelligence, that's the amount that you are prepared to put up for Paramount. Are you interested in buying Paramount? And if so, at what price?
You know what? We remain interested. We think it's a phenomenal asset. And we think Sherry and our management team, they're well positioned to continue their path. Or if she wants to sell, we're happy to help. And I have a lot of faith in Sherry Redstone. And I have a lot of faith in George Cheeks and Brian Robbins and Chris McCarthy. They are excellent managers. And if she decides that's the path she wants to take, have them run things, that's great. If she's still interested in selling, we are very interested in sitting down to figure out if we can get something done. A lot has occurred over the last 6 to 8 weeks. Events that we're not used to seeing happen so rapidly. But we do have strong interest in buying all or some of Paramount Global.
Do you think your bid can be competitive, both in terms of what it offers strategically as well as the financing to do it?
You know what? Capital is not the issue. There's plenty of capital available to support our bid and to buy the asset. The real commodity here is certainty of close. And the great investor Mario Gabelli said it best. This deal will live or die at the FCC. My advice would be to walk into the FCC with somebody that is FCC approved, somebody who owns and operates television stations.
Do you think Sony can do that?
Well, when you are a foreign owner, that's tough to own television stations. I think you can own up to 20%. You know, they don't allow that. So we've invested about $1 billion buying ABC, NBC, CBS, and Fox affiliates around the country. We are broadcasters first, and we are FCC approved. And that is the key to this deal, approval, regulatory approval. There's plenty of capital. Just in this lobby alone, there's about $80 trillion looking to invest in something. As a matter of fact, I can step off this podium and raise another $30 billion in about 5 minutes. Just go talk to her, him, and her, and we're over. So capital isn't the issue. Approval is the commodity. And that's the thing that everybody needs to be mindful of. You want to be respectful of the process. I don't think you want to go into D.C. saying, I've never owned and operated television stations. I think that's important.
Byron, having said that, it sounds like you're pretty far along in the process. Do you have bankers lined up? What can you share with us in terms of who you're working with when it comes to, as you say, lots of capital out there. So who are you working with in terms of lining up the financing to actually do a deal?
Well, that I can't share with you. But I will tell you this, that the capital is very much available, not just to me, but others that are skilled in this area of buying and running media companies. And I think that's what's going to come out in the whole process. What you don't want to do is tie up the asset for a year or two and not get approval.
How far along are you, though, in actually the specifics on a deal in terms of getting something done?
You know, quite a bit of our capital has already been investment committee approved. So we're good to go in that regard. You know, I think we wanted to be respectful of Skydance and Redbird Capital. They had a 30-day exclusive. And so we wanted to see what the story is and confirm whether or not that exclusivity has expired. We're not, you know, a very smart banker said to me, Byron, you don't have to do a thing. All roads lead back to you. Because there are assets there that we want that others don't. We want the linear networks.
Why?
I believe in the linear network business. I think it's the majority of their revenue and their EBITDA.
Yeah.
You know, they're folks.
But you know that's the contrarian approach. Everyone's trying to get rid of their linear operations.
You know, I bought the Weather Channel.
Make it work?
I bought the Weather Channel 6 years ago, and they couldn't. I bought it from Bain, Blackstone, and NBC Universal. They couldn't wait to give me the keys. And thank you very much. In those 6 years, we pushed up the top line revenue and we pushed up the EBITDA, and we're running the Weather Channel at a 50% margin. So we're very comfortable in the linear business. We believe that a number of these linear assets are running a little heavy on expenses.
Is there growth in the linear business?
Yeah, I think there is. I think the Weather Channel has enormous opportunity to grow. I think you're going to see us continue to grow. People are not, especially in the weather. The weather business is a big business because climate change and global warming is very real.
It's the one thing we check every day.
Yeah, it's the one thing, and I will tell you, it's going to be more. I'm not trying to be Debbie Downer here, but the weather is going to be more and more extreme going forward.
That's a good point.
And whenever we have extreme weather, we are pretty much #1 in that category.
Byron, because you are so upbeat about the linear TV business, if you will, what is it that other folks you think get wrong when they're all saying this is the time has passed, it doesn't make sense anymore?
You know, a lot of times people just don't see what you see, and that's key in investing. What people want to see is double-digit growth. They're fascinated by the double-digit growth. That's what they're attracted to.
But is all linear television, do you think, can have double-digit growth? Or is there something special about the Weather Channel, as you said, climate change and different things make us want to look at it more often?
Yeah, I think what will happen is I think the sub count will come down, but I also think that it will migrate to streaming. You know, when I bought the Weather Channel 6 years ago, you didn't have YouTube and Hulu. So now, you know, there are millions of subs that didn't exist before. Content will be consistent, and folks will always want premium content. They just want to pay a fair price for it. I think what's happening is you're watching the consumer say, I want this content, I just don't want to pay this much for it. And I think you're going to see our content survive and do very well because it's being priced correctly and it's packaged with other content that they're willing to pay for. So we're not worried about that. That's the least of our concern. In the last 6 years, if the revenue was going to go down and if our EBITDA was going to go down, it should have happened in the last 6 years, but it didn't. It went up.
But you're not immune to what else is going on in the world and what's affecting some of your competitors. You just recently announced some cost cutting, some degree of cost cutting. I don't know the exact numbers, but you've had to tighten your belt a little bit as well.
We have approximately, like I started the company from my dining room table 31 years ago. And in our 31 years, we've never had,
you
layoffs.
Still have that dining room table?
I do.
And you're going to submit that to the Smithsonian?
I'm going to do that. I'm going to submit it. And more importantly, the chairs that I wore holes sitting there. But we had about 2,500 employees.
Yeah. And
we reduced our workforce by 300. And it was very painful because we've never done that before. During the pandemic, I didn't lay anyone off. Because I didn't want anybody going out into that cold, ugly world of the pandemic. Unemployment now has hit a low, and there's plenty of opportunity out there for folks to go and get other jobs and continue to flourish. So that wasn't easy, and our focus now is more on streaming. We have Local Now, which is something very special, which is a free streaming service that uses artificial intelligence and provides local news, weather, sports, and traffic, geofence to the user's zip code. And the most important thing here, it's free. The world loves free, and it has over 20,000 movies and everything else.
We do indeed.
To the choir. Byron, going to have to leave it there. Always wonderful to talk to you.
Thank you for having me.
Byron Allen, over at Allen Media. And we continue our coverage here from the Milk and Stage. And, you know, we talked to him about linear TV. Let's face it, we have a personal stake in linear TV. So, you know, I mean, I don't want to put him on the spot, but he's always been a big believer in this. And he's built a business going in places that other people didn't want to go, or at least they didn't see the value of going there. And that's why I kind of wonder what Paramount ends up bringing to the table if he's able to get it.
And sticking with it. It's not like he's, bought it, owned it for a little bit and getting out of it. So it'll be interesting to see ultimately how the deal works out. All right, everybody, we do have to go back to the markets. On that, let's head back to our New York headquarters. And here once again is Tim Stenbeck. Tim.
Hey, thanks, guys. Long live linear. Shares of Paramount, by the way, down about 3% right now. On a bigger level, though, stocks are mixed. The S&P 500 barely higher right now for a fourth day. We see the S&P 500 up just fractionally right now. This rally losing a little bit of steam. The Dow still in the green. The NASDAQ 100 higher, down by about 0.1%. We are seeing a yield on the 10-year lower by 4 basis points. S&P 500, if it does close in the green today, it'll be the longest winning streak since March. It's led higher today by Alphabet, Apple, Eli Lilly, and Visa. The S&P 500 just about 1% off its March highs. Now, the rebound that we've seen in equities over the last week or so comes from optimism about what the Fed will do following that Fed-friendly jobs report that we got on Friday and the most recent Fed meeting on Wednesday. Also better than estimated earnings. Got quite a few companies on my radar today. One of those companies reported earnings after the bell yesterday. It's Palantir. Shares having their worst day in nearly 2 years, down 15%. This even after the company boosted its revenue forecast for the full year. Expectations going into the print were high. The stock tripled in the past year. It was up around 40% going into yesterday's report just so far this year. Palantir's roots are in government sales. Remember, it develops software and analysis tools for companies and government agencies that it says are allied with American interests. The company's CEO, though, said that demand from U.S. companies for its AI software now drives the business. Also among the best performers on a percentage basis in the S&P 500 is Kenvue. It's the consumer health company that spun off from J&J. Shares higher today after it announced a roughly 4% reduction in its global workforce. Higher right now by 4.7%. This all part of a plan that's intended to make it more competitive. The company also reaffirmed its full-year forecast and reported quarterly profit and sales for the period that ended in March that beat expectations. Today, after the bell, we get earnings from Reddit, Lyft, and Rivian, among others. We'll bring those numbers to you as soon as they cross. Kenvue shares higher by about 4.6%. Guys, back to you in Beverly Hills.
I didn't know we were back on air. You gotta let me know when they
He's chatting away. What can I tell you? All right, everybody. Philanthropy is one of the main areas of discussion here at Milken, and our next guest is participating in a panel a little bit later on today. She'll be talking about gender equality and so much more. We are delighted to have joining us Erin Harkless-Moore. She's Senior Director of Investment at Pivotal Ventures, founded by Melinda French Gates. And their goal, their mission, to accelerate the pace of social progress in the U.S. So they're removing the barriers that really hold people back, which is so important. Welcome, welcome, welcome.
Thank you for having me.
Tell us a little bit more about what you guys are doing specifically at Pivotal Ventures. We understand the broad mission, but drill down for us.
Sure. So Pivotal Ventures was founded in 2015 to increase equality and opportunity for people here in the United States. Gender is a huge component of that, and we've made a $1 billion commitment to advance women's power and influence. What does that mean? That means getting more women in the positions to make decisions, control resources and capital, and influence the policies that impact their homes, their workplaces, and their communities. So we pull multiple levers, including philanthropy and also investing. We're trying to get more capital in the hands of women founders and investors that are going to build the next generation of transformative companies that are going to shape economic growth here in the United States.
Yeah. Well, I want to hear more about the investing side of this for obvious reasons here. I mean, how successful have you been? Or more importantly, how do you measure the success of those investments? Because it can't just be about the return, right?
Yeah. Return is important. We are returns first investors, but we're also really focused on the impact that we're driving. We look closely at the demographic data of the firms that we're investing in and the companies that we're investing in to ensure that they're building diverse and inclusive teams. Because again, when you have more diverse decision makers at the table, you'll have better outcomes.
It's like the supply chain, the pipeline,
the supply chain.
All of it. Right?
Exactly, exactly. And the sad fact is only 16% of check writers at U.S. venture capital firms are women. 2% of venture capital funding goes to women-led teams. It's a huge opportunity if we get more capital in the hands of women, and we're really focused on doing that at Pivotal Ventures.
You know, it's interesting that you say that. I think go back a few years, and we did a story here at Bloomberg that even in female-led venture capital firms or female venture capitalists, they were still less inclined to invest in female-owned businesses. Is it getting better? Like, what are you seeing in terms of improvement in that area?
No, it's a challenge for sure, but I think we are seeing more and more women launching funds, raising larger funds. We've backed 20 firms at Pivotal Ventures that have cumulatively raised over $5 billion. So it's a huge opportunity. And I think founders want people that can help them drive value and add value to their companies. And that requires a diverse set of stakeholders, including women at the table.
All right, I got to ask you, so will you invest in a man-led company that is doing incredible things for women?
Yeah, no, we will. And one example of that is our work in the care economy. It's a $648 billion market. That's larger than the pharmaceutical industry.
Yeah.
And we think it's ripe for innovation. Many caregivers are women, but they're also men. We're all caregivers at some point in our lives. And so we're willing to invest in male-led teams that are innovating in that space. One recent example is a company called Summer Health. They just raised their Series A. They're disrupting pediatric care in this country. Female CEO, male co-founder, and they're going to build a huge business. It's going to make it simpler for parents like myself to get the care they need for their kids.
Erin, I have to ask you, though, about some of the pushback to these initiatives, whether we're talking about formal DE&I initiatives or something that's a little bit more fluid like what you guys at Pivotal are trying to do. You've seen the pushback, and it's not just, people waving their fists. There are lawsuits out there here. How do you deal with that? Because there is a legal issue. In some cases, it has to be addressed, whether the lawsuit is bunk or not. But you have to devote time and resources defending that.
Yeah, no, you do. And that's what's a challenge in this environment is I think it takes our eyes off the ball of the opportunity that we're missing by not getting more capital in the hands of women and diverse individuals. The pie is big for everyone. It's not small. And I think if we can bring more voices to the table, we'll see that in our returns and our impact and in the outcomes. So we remain focused on doing the work that we set out to do at Pivotal and investing in women, using our levers around social impact, strategic partnerships, philanthropy, to unlock that power of women in all spheres.
No, but it is interesting, like this whole idea of if we believe you can kind of invest, the pushback in terms of if you have money to invest, that it just can't go towards women, started firms, if you will. I mean, I don't know. It's just part of kind of the conversation we're having around the country. What do you say to that people are pushing back and filing lawsuits?
Filing lawsuits. I say, look, we're going to keep doing the work, right? When women have the opportunity to build businesses, that raises up our whole economy. Black women in particular, prior to the pandemic, were responsible for starting 40% of the net new businesses in this country, which is huge. And so, if folks want to push back and file lawsuits, that's going to happen. But at Pivotal, and for me personally, I'm going to keep searching for great talent, great investment ideas. And, those can be led by men, but a lot of them are going to be led by women, too.
Yeah.
All right. It's a great place to end it. Erin Harkless-Moore over at Pivotal Ventures, live here on the Milken stage. And, Carol, we continue our coverage. We actually had a chance just a little while ago before we started our official broadcast at 3 to catch up with Minneapolis Fed President Neel Kashkari. We actually asked him about the state of the economy and the pace of the Fed's fight against inflation. Here's what he had to say.
The Fed can and will achieve 2%. The question is, if disinflation is still underway, then maybe it'll continue on its own, and we can then take that on board. If we need to hold rates where they are for an extended period of time to tap the brakes on the economy, or if we even needed to raise, we would do what we need to do to get inflation back down.
I have to just ask you, though, about 2%. And I know why the Fed stands by that 2%. But I talked to people around the room this week here, and their cost of capital, they're basing that more on closer to a 3% rate. And the idea is they're saying, look, the 2% target, that needs to come up. That's not the reality long-term structurally, and at least not for the folks in this room.
Yeah, I disagree with that. Yeah. I mean, I think that ultimately the central bank, whether it's the Fed or the ECB or the Bank of England, can determine whatever the inflation rate is. And over time, if they conduct their policy appropriately, people will come to understand that, will adjust their behavior. We're committed to 2%. We will get to 2%, and we will get an interest rate environment necessary in order to achieve 2%.
And that was Minneapolis Fed President Neil Kashkari, and he was really talking about the fight to get inflation down to that 2% target. Because remember, elevated inflation, it's really had, or elevated interest rates, I should say, have really had a big effect here on the economy, including the housing market. Just last week, Treasury Secretary Janet Yellen, she actually testified before Congress, and when asked about housing affordability, she didn't mince words. She said financing conditions and home supply are so poor that it's, quote, almost impossible for first-time buyers to buy a property. Now, while that poses a lot of major challenges for her and for government policy in the long term, it is opening up investment opportunities in the short term. Sean Dobson has transformed regional broker dealer Immerse Holdings into a trailblazing real estate investment platform with a big focus on single-family rental homes, acquiring more than 50,000 homes over the years with a combined property value of $10 billion. Sean joins us now, the chairman, CEO, and CIO over at Immerse Holdings. And Sean, I do want to start off talking about that opportunity here, because there's always two sides to every coin. You know, when there's pain in one sector, that can often sort of bring about opportunities to invest. And you found a way to do that specifically in buying up single-family homes.
That's right. The sector has been very exciting. It's been a little bit complicated over the last 15 years since the financial crisis. But now we're very excited, very proud of the access that we provide to families who are having a difficult time buying in the best neighborhoods in the country.
For this to be a successful investment strategy, you have to have a belief that what's going on in the housing market is structural and will be persistent for some time. Is that
That's
the case?
right. When we started the platform post-financial crisis, what we realized was that the access to credit was going to become very, very difficult. And now, with interest rates so much higher, the access to credit has become a price issue as well as an access issue. So for those families that are trying to move into those neighborhoods of opportunity, there's really two ways to get there. If you're fortunate enough to have the financial wherewithal to have a large down payment and qualify for a mortgage, buying is an option. But today, that's probably less than a third of families that really meet those things. So at that point in your life where it's time to live in that type of product of 3 bedrooms and a nice school district, you need to get there. And if the capital isn't available, then we supply the capital.
So what kind of deals are you doing in this environment? You guys did find opportunity coming off of the great financial crisis, Sean, really, and it paid off really well. Is there a similar type opportunity? Like, talk to us about the environment today.
Well, I think it's more subtle, and we're not really worried about sort of a gigantic...
It's obviously not depressed properties now.
Right. So there's really a scarcity of issues. And kind of what I like to say is that you can think about the residential housing market in sort of 3 ways. There's those that are locked in, those that are locked out, and then we have the market itself is kind of locked up. And what I mean by that is we've never seen mortgage rates move so quickly that there's such a large spread between the available mortgage rate and the mortgage that people have. That creates a significant lock-in effect, and that's brought down the float of the supply of homes for sale by 1/3. This is the largest asset class in the world, and the supply of available homes for sale dropped by 1/3. It's historic. So then you have the locked out, which are the people that were originally post-GFC, unable to qualify for a mortgage because mortgages aren't available unless you have a very high credit score. And now you have an affordability issue that's brought about by price. And you have a large group of families that are locked out of the bond. And then my third dumb little thing I made up here for you is that the market itself is locked up because the interest rates have risen and investor return expectations have risen, and yet asset prices have risen.
It doesn't sound good.
Oh, it's real estate. You have to be patient.
How do we boost supply? Neil Kashkari talked about this and the concerns about how this plays into the inflationary picture, that there isn't enough houses out there. Yeah. It's pushed up prices, and that has put pressure on inflation, and it's made it stickier.
That's right.
How do we improve the supply of homes?
Well, I think supply is an issue because it takes a long time. So it's zoning, it's partnership with the local governments, it's land, and 2/3 of the price to build a home in today's market is labor. And the labor costs have been rising and rising, material costs have been rising. So there's not like the easy button here. This is going to be, it's going to take some time, and it's going to take collaboration by everyone involved, including the credit capital markets, to allow that family that doesn't have a perfect FICO score a chance to get a mortgage.
In terms of being able to acquire these properties, what is the cooperation right now with builders? Are they realistic on prices right now, or is there still a bit of a gulf?
The builders are in a very bull cycle for their business. Their business can be a boom-bust business, and they're in a boom because they're the ones that have the land, and they have the build capacity, and they have the demand. There are still a lot of consumers buying and borrowing at these prices, paying these prices and borrowing at these rates to really satisfy the builders' product. Now, the builders have a very difficult time providing services to that entry-level home. which is where we specialize. That's sort of $350,000 home between Charlotte and Texas and the smile of the United States. So they have a very difficult time producing that home at a profit margin.
I do have to ask you, and this, there was a great Bloomberg story about kind of the challenges of single-family rental investment. And this probably applies more to smaller players rather than like a behemoth like yourself. But this idea of keeping tabs on properties, dealing with squatters, and other legal issues that come up that can really affect your cash flow here. And you weren't quoted in the story, but Immerse was mentioned in it. I know this is something you guys have had to deal with.
Yeah, like at the end of the day, we manage one home in one neighborhood, and we're providing services to one family, and you have to get that right every day. So if the water doesn't turn on, if a squatter is moved in while it's in the marketing, we have to solve that. Now, we have 1,000 people across the nation focused on the issue and automation and a lot of software. We don't get it right every time. We get it right a lot more often than we don't get it right. But that's the nature of the business, and for us, that's the opportunity. This is a complicated business, and not everyone is well situated to tackle it.
So what is the opportunity in today's environment for you?
It's really, for us, it's expanding the access to capital so that capital really understands they're supporting the renter. Renters are important. It's always been a third of our economy, so we need to give them better choices.
Right.
So I think that's the opportunity to expand the access to capital. And we build a lot of homes, so we're building homes and factories. So it really is the demand. We're very different than a lot of real estate sectors. We have really high fundamental demand. So for us, it's about building more efficiently, building in a higher space, renovating more efficiently, and then getting investors comfortable that this is the thing to do, to support these families and get them into these neighborhoods.
Longer term, when we talk about housing supply, the mismatch between supply and demand, whether it's on the rental side or on the purchase side here, do you see a moment, I guess, I don't know, 10 years out, where we will see meaningful equilibrium there, or is that just a pipe dream?
It's funny you mention this, because a year ago we were looking at the fertility rates in the United States and forecasting out a decline in population, and that would be one way for this to balance itself. Then we have 3 million new immigrants in the United States now in a year and a half. Those are people that are going to put more demand on housing. So the housing market is going to deal with a lot of confluence of where the demand comes from and where the supply comes from. But what's really important for policymakers to think about is, like you said, this is a 10-year plan, a 15-year plan. And you have to be out in front of it. So cities have to operate in the way that people want to live there, so they know that 10 years from now they have demand.
What about geographic rotation? Does that not help at all?
It helps a little bit, but what we've seen is people leave the core, the big cities, the gateway cities, and move to these smaller cities. And the smaller cities are sort of bursting at the seams in many cases.
Everybody's going south, aren't they? Everybody's.
More sun, maybe less taxes.
Yeah, I was in Nashville, North Carolina. Have you ever tried to drive through there as of late? It's like driving down Fifth Avenue.
Everybody's in the Carolinas.
Exactly.
Sean, thank you.
Thank you, guys.
Sean Dobson over at Immerse Holdings. A nice look, really, at the residential real estate market, and more importantly, the investment opportunities in it.
I think it's so interesting, like coming off of Neil Kashkari and talking about, the shortage of supply of housing, what that means for inflation, talking with Sean, who's in the thick of it, and talking about some of the dynamics that's needed to come together to be able to build out the supply.
And how data-driven that Immerse has been in this. I mean, you talk about them being a pioneer in that space. You're really taking something that's very local, very by the gut, and applying real data to it, and I guess that makes it a better investment.
Great insight. Yeah.
All right, a lot more coming up here in our special coverage here from the Milken stage. Seth Burrell, managing partner over at Thoma Bravo, standing in the wings. Stick with us. We'll be back in a moment. From Beverly Hills, California.
This is Bloomberg. Welcome back, everybody, to our live coverage of the Milken Global Investment Conference. I'm Carol Master alongside Romaine Bostic. Well, I've got to say that among the stocks that we've been watching in today's session, AI software firm Palantir, it's falling in today's session. It's down about 14%. This is as sales forecasts fail to impress investors. This is a company that's in the middle of the AI play, but a software company. And Thoma Bravo is one of the largest software-focused investors in the world. So we're going to talk about the software space right now. They've got over $138 billion in assets under management as of the end of last year. So let's bring in Seth Borough. He is managing partner at the company. Seth, great to have you here with us.
Thank you so much for having me.
When you see the results of Palantir, what do you think? Does it mean anything in terms of the software area, AI related or other?
Our view on software is that it is an incredible long-term space to be invested in. And what we're seeing right now, at least in our portfolio, is that this next phase of AI, Gen AI, which of course we're talking a lot about at this conference, is driving all sorts of incremental, interesting use cases for our portfolio companies' customers. And the innovation we're seeing is pretty incredible at the moment.
What kind of software, AI related, are they specifically looking for?
For us, where we see most of the innovation, it's organic inside of our portfolio today. So we're buying within software the most innovative companies in the sectors that we're focused on.
What does innovation mean, though, the AI space? Because AI on its own is kind of innovative, right?
The thing about AI that's so interesting is that it has been a foundational technology in cyber and infrastructure software for the last decade. Today, we've now find ourselves in the Gen AI phase of AI, which is the next phase, which is all that we're talking about. But fundamentally, AI has driven all of our cyber portfolio and application and infrastructure portfolio to be able to operate at scale and do really incredible things. Today, what we see is that our development teams inside of our portfolio companies are now leveraging this next generation of artificial intelligence with Gen AI to really deliver incredible applications to their customers.
So is that sort of the investment opportunity, meaning the AI product that's put out for whoever that end consumer is? Or is it all the companies that might be leveraging AI for their own internal things, whether it's drug makers or even finance companies that might start to rely on it a lot more?
It's a great question. So we really see it today on multiple fronts. One is delivering more value to our company's customers. It's incredible the types of applications that are being developed in very short order. Second is in the world of cyber, for example, now the cyber threats are much more incrementally intelligent with the usage of Gen AI, defending those threats with AI. So it's really AI battling AI in this really complex cyber world that we're living in. And the third is driving a lot of efficiency in organizations. We really view Gen AI as an enabler of talent. And we think that what really talented people can do, of course, there's a lot of those individuals within the software market in every industry, is fundamentally expanded through this new technology.
I mean, part of what's made Thoma Bravo so successful, and particularly in the technology and software space, is the ability to properly value a potential deal. How difficult is that right now? Because there's so much hopium, there's so much hype around AI that, at least from an outsider looking in, it's hard to know what's sort of substantive and what is just kind of that sizzle. So how do you come to a proper valuation when it really is just trying to be modeled out like 30 years into some future that nobody really knows what it's going to be?
In the world that we live in and operate in, for us, it's much more about what the company will do and how it will perform over time, how much cash flow the business will generate. Within all of our companies, which are very established, very innovative businesses, you're right, there is a component always of innovation, and we need to be partnered with those businesses that are the most innovative. And so we look at this new capability that the company has, and it is table stakes to have a strategy around Gen AI today, but it's part of the overall business. And so for us, at the end of the day, it's much more about company performance than about over the long term than it is about evaluation at a given point in time.
Well, that's interesting, because if we're thinking about Gen AI and its real impact is maybe a decade in coming, or it's going to take multiple years, how much of a runway are you going to give a company when you look at investing in something? Like, are you willing to kind of pay up in terms of multiples with the expectations that it might take 3 years, 4 years, 5 years or longer?
In the businesses that we are investors in, of which we generally are the control investor, these companies always have a segment of their development budget that's very, very forward-looking. So it's a combination of what we're doing today and also looking in the forward. You always have to be funding that innovation cycle. Customers want it. It's exciting for employees. And today, the big difference with this new technology that really has come to the surface in the last year, it's usable today. Products are being delivered today to our company's customers, and the payback is actually relatively quick.
Can you shed a light into exactly what companies are doing with all of this? Because I feel like some of Gen AI is going to be somewhat mundane tasks, but they're now, done by software or whatever. Like, give us an idea, right? In terms of the broad macro, we get it. Like, it's going to change a lot of things and processes. But what specifically? I'm curious about some of what you're seeing and how it's playing out.
Yeah, you're right. I mean, today, what you're hearing a lot about and what you're seeing is that larger organizations are able to use the technology really to drive efficiencies in their organizations.
Like back office and things like that?
Back office is a great example. The way we think about it in the world that we're living in is that it's an incremental value to our company's customers. So it really makes the products that our companies are building and selling much more usable in new ways to more members of an organization. We're really optimistic about it as a use case. In cyber, it provides our company's customers the ability to prevent threats and detect threats much quicker. And anomalies much quicker. And it's an extension of already what's gone on in machine language for really the last decade.
Seth, I want to ask you a little bit about just the broader private equity space right now, particularly in the context of regulation. There's been a lot of rumblings in Washington about some of the strategies PE firms have taken. Roll-ups, of course, have been kind of a staple of that. And the idea that at least certain folks in Washington want to sort of clamp down on that. How in tune are you right now with some of those regulatory winds circling, and how much of that is going to force you to maybe rethink some of the strategies that you've taken in the past?
I think certainly we're in a different regulatory environment than we have been in the past. For us, we're operating in markets that are just so huge and enormous, with a lot of growth ahead of it. But it's not something that's taking up a lot of our time on a day-to-day basis as we're making new investments.
Does the election change that, maybe? The regulatory environment?
Your guess is as good as mine.
But could it, in terms of the outcome, you think?
It could potentially. There could be. I think every time that there's a change, right? There is certainly a change in regulatory environment. We don't plan on that. We don't try to predict that ever. It's just part of the landscape today. And you're right that the landscape today is different than it was in the past.
Do you have another question, Carol? Because I want to pivot to sports for a second. All right, I got to ask you about the Ottawa Senators. There was a lot of mystery behind the purchase of the Senators a few back late last year.
Tell us what you're doing.
And Bloomberg, of course, was out in front reporting that you were behind that bid here.
Are you?
So I am part. I grew up in Ottawa.
Yes.
I am a lifelong hockey fan.
And
I played hockey my whole life.
Yeah.
And I'm very passionate about it. And I am part of the ownership group of the Ottawa Senators. But I am certainly not the controlling shareholder in the Ottawa Senators.
Well, still, that's got to be like a childhood dream come true, even to have a minority stake.
It's an incredible amount of fun and something I'm very passionate about.
Yeah.
Seth, thank you so much.
Thank you so much for having me.
Really appreciate you stopping by. Seth Burrow, Toma Bravo joining us here.
Yeah.
Love talking sports.
I do too.
I
mean, and everyone's in. And look, if you had, I don't know who you rooted for as a kid. I mean, you're New Jersey.
Giants. I went to Giant games with my dad.
But if you had a chance to get a minority stake, you would take it.
Totally.
Of course.
It's so much fun.
That's like lifelong dream.
Sure, you don't want to change your mind and tell us something? All right, we got to run. All right, coming up, David Steinbach, CIO of Heinz. Man, they have a big global view when it comes to real estate.
Yeah, and this is, we're talking with Sean Dobson a little bit earlier about residential real estate. A real nice take coming up here on what's going on in the commercial real estate space. So much gloom and doom out there.
Yeah.
But I think what we're going to hear from him is a little bit more optimism.
Curious what he has to say about his properties in China. That's coming up next. You are listening and watching Bloomberg. We are live from the global conference, the Milken Conference in Beverly Hills. More to come right here on Bloomberg Television and Radio.
Welcome back to our live special coverage from the Milken Global Conference in Los Angeles, California. Romaine Bostic here alongside Carol Master, broadcasting live on television and radio. You're used to that.
We're everywhere.
Yeah. Remember those
Multiple
little global simulcasts we do for like 7 minutes? Someone thought it'd be a good idea for us to expand it to 3 hours.
Expanded simulcast.
Yeah, so that's a good. We've been talking a lot about the real estate sector today.
I think this is so great. Yesterday was so much about private credit, which is really important to get a gut check on that. But real estate's so important. We started off the day, talking with Neil Kashkari over the Minneapolis Fed, the importance of supply of housing here in the United States, the inflationary pressures we are seeing. But that's the residential side. I'm really also curious about the office side. Something we keep feeling like, is another shoe going to drop? We keep waiting.
Yeah, absolutely. And actually, let's listen to some of the comments that we got on this space here. It'll be a nice setup here for our next guest. Let's take a listen.
We're very bullish on real estate. It is the biggest industry in the world. It's not going anywhere. We can't have events like this. People have nowhere to live. People have nowhere to work unless there is great real estate. We will continue to invest, and we think it's a fantastic time to be putting money to work.
What we focus on is where the population migration is going. So we love the U.S. writ large, where the businesses are out moving their businesses to. Like rich people can move to Aspen and other places like that, but you can't move a whole business there. So Florida, Tennessee, Texas, all of the states that you see positive migration, I think is a great place to put your capital.
The sentiment in real estate, particularly commercial real estate, particularly office buildings, is so negative. It's so awful that I am just attracted to it.
Yeah, commercial real estate, really the talk of Milken this year, as of last year, with roughly 20% of the $4.7 trillion in U.S. commercial mortgages held by lenders and investors coming due this year. It's the reason why everyone's talking about it. I might create some pain out there for some folks who need to refinance, but it has lured a slew of investors armed with hundreds of billions of dollars to target commercial real estate deals. One of the most active players is Hines, which last month announced a new platform called Hines Private Wealth Solutions that seeks to capitalize on some of those troubles in the real estate industry. David Steinbach, the Global Chief Investment Officer at Hines, joining us right now. And this is, it's got to be one of the biggest opportunities you've seen in your career.
Yeah, these only come around a few times in your career, and we definitely have a moment where there's going to be real opportunity. So it is exciting to see kind of what's ahead this year.
But how do you sort of cut through all the gloom and doom? No one's going back to the office. None of these buildings can be repurposed. How do you look at that sentiment and then look at those properties and decide there's something of value?
Yeah, so Hines is a global investment manager. We have about $100 billion under management, and we're in about 30 countries around the world. So it's a pretty unique perspective in terms of seeing real estate through a global lens. And I'll say it's not the same everywhere in terms of just different dynamics, not only macroeconomic policy, but also physically what's going on the ground in different places. And so even the experience of office has been very different around the world the last few years.
Let's go around the world. Let's start with the U.S. property market and the office space. Your exposure, what are you seeing? Is there going to be another shoe to drop?
Yeah, look, I mean, I think it's important to remember that what's happening right now is really 2 years in the making since interest rates started going up, right? So we're over 2 years into that. And so what this has felt to me has been a lot more of a controlled, managed process. Certainly there's a lot of pain in the system, but people have had time to work through the issues. And so I think time has been the key ingredient here to finding a way forward. So what we're doing now is much more looking on the horizon for what's ahead and where those opportunities are. Certainly there's a lot of things that need to get fixed still. I think private credit is a part of that, but I know equity is going to be part of that solution as well.
David, having said that, people talk about some of the office properties in like Midtown Manhattan and the Garment District. Nobody's going to ever want them in terms of office space. Will they have to be, like, what do we do with that? Some have said maybe the government needs to come in to help kind of clear some of that out. Is it fair to say that there's going to be office space that never is going to be used again?
Yeah, sure. I mean, look, office is a big sector in the United States.
Yes.
And there's a lot to that, right? I think what first needs to happen, and I think we're going to see it this year, actually, I think we need to see some transactions in the trophy space. So the best of the best, we need to see some real trades and have price discovery there. And I think that will be a huge signal to the market once we really start seeing that. Right now, I mean, we're in conversations with people where there are discussions. There's still a bid-ask spread. I think that bid-ask spread will close this year, and we'll finally start to see some transactions. And that's what the market really needs to understand how to price the sector.
So does that mean, yes, there will be some properties that will just never be used again, office space?
Yeah, look, I mean,
in New York?
Yeah, just like in the retail sector, 15 years ago. I mean, there's certainly going to be some things that aren't going to be repurposed heavily or torn down. But I know that there are high-quality office buildings where the rents are performing, the fundamentals are there, but the capital markets are not.
Yeah.
And so what we need to see is the transactions to be able to have some certainty for how to price the rest of the space.
As far as your investment strategy, do you take a hard look at the properties that need to be repurposed, or are you primarily sort of focus more on those ones that are already set to go?
Yeah, look, I mean, a part of our operating model is really tapping into what we see as a much bigger change in real estate investing right now. I mean, there's regime change in interest rates, and it's going to be a different world. The way I've described it is the last 40 years, it's been downhill skiing in terms of a sport, and it's going to be cross-country skiing for now, probably for quite a while. And so I think that, in that new sport, it really is a new sport. It's a new mindset, a new muscle. And I think there's going to be a real shift from a search from beta to a search for alpha.
Yeah.
And that alpha generation really is that local execution. And it takes a very clear-eyed view on what office or whatever the real estate product is and what's going to make it work and what's going to make it work in this new era of investing.
Cross-country skiing is really hard. I don't know if you've ever done it, but it's
hard work.
I was going to say with climate change, there isn't a lot of snow out there, so it sounds like it's going to be a little rough either way.
I am curious. I mean, we all kind of are aware of the issues in the U.S. commercial real estate market.
Right.
You have an international footprint here.
Right.
Kind of compare and contrast that with what's going on overseas.
Yeah. Look, I mean, it's definitely, it depends on where you are. So last year, certainly Europe was leading the recovery in many ways. There was more transactions. There was more pricing discovery points for investors to get comfortable with. But we're seeing opportunities still in Europe. Our business is pretty balanced. Last year, we were about a third in Asia, a third in the U.S., third in Europe. I think the U.S. will now be more of our business this year. And we're certainly going to chase that. And in Asia, there is a lot of opportunity. In Japan, Australia, build to rent is a significant investment theme we see around the world. The United States is about 3 million houses short. That theme is elsewhere as well, and there's real reasons for that. And we think we can help solve some of the problems and bring new product to a lot of these countries.
Greater China, you've been there since 1996. What can you tell us about the real estate market in Greater China right now? And the government, do they ultimately need to do something to move this along finally?
Yeah, look, it's definitely been a tough situation, and we do have a presence there for a long time. We've been, we're still there. I'd say we're very cautious and being very careful, as everybody would be. We've actually begun to focus a lot more in India the last, I'd say, even 24 months. And India has been a huge area of growth for us, where we see a lot of expansion plans for a lot of U.S. companies, frankly, are setting up a lot of a deeper presence there. And so that's been a significant pool of opportunity for us.
Do you still want to have a presence in China, Greater China?
I think, look, I mean, China's going to be one of the largest economies in the world. I think it's just a matter of what it looks like. We're still there. So, but we see a lot of opportunity in the entire region, frankly, and all of that region feeds off of each other in terms of how the broader economies work.
What does the price discovery and price transparency look like over there right now, though?
In Asia more broadly?
Well, specifically in Greater China.
Yeah. Look, I mean, it's like a lot of other, I mean, even the United States, there just hasn't been a lot of significant trades yet for the trophy type of assets. So, but that's the same thing in the United States. We're waiting for that. Like I was saying earlier, we're waiting for that as well.
Are there distortions, like government sort of distortions, given how much involvement they have in the property market?
Yeah, look, I mean, within the Chinese economy, certainly the local Chinese insurance companies, there is a lot of local capital there that I know a lot of sponsors are looking to now to backfill where international capital was. And so certainly within that context, there is capital and liquidity.
David, you have a massive team, a massive presence, and you see so much. You mentioned India. I think that's really, fascinating. If you had to pick one market globally where you're like investors, I think about the Bloomberg audience, that keep an eye on, is it India?
I think, yeah. I mean, look, India is a place of dramatic change, without question. And we're putting a lot of resources around it. We have a lot of opportunities that we're unlocking. But I see opportunity everywhere, honestly. Like I said earlier, the United States, to me, I think is going to be where a lot of investors focus most on. It's probably where we're going to see the most transactions.
In the U.S.?
In the U.S.
Next 12 months,
For the next 12 months. The next 12 months, yeah. And I think it'll start with credit and move into equity. And so I think that's how investors are looking at it.
I have to ask you the interest rate question, the Fed question. We came into this year with expectations we were going to get multiple rate cuts. People are still holding out we get something. How much of your business right now would be dependent on a meaningful shift in interest rates, whether it goes down or up, for that matter?
Look, so one data point, if you look at the last 17 elections, 17 election cycles, what did the Fed do? About 2/3 of them, the Fed actually raised rates. Only about 6 of them, the Fed lowered rates, and 1 of them, it held steady. So it's interesting knowing so you see the patterns, right, in terms of like where past elections were. So I would say the Fed is likely going to take the right view for the economy. And whether or not rates have gone up almost 500 basis points in our business the last 2 years, whether or not there's a slight cut, it's flat, even slight up, it's not going to matter that much in the scheme of our total business relative to where we've been. So we're much more focused on how do we create income, how do we create value, how do we make the right investments today for a long-term horizon, because real estate is a longer-term horizon investment. So it's 5 to 10 years is often how investors are holding it, and so that's how we're underwriting it right now.
You know, it's fascinating. David, thank you so much. But I just feel like so many of our guests here at Milken have said a little bit higher, a little bit lower. It really doesn't matter. This is kind of the environment we're thinking we have to operate with.
Right. Yeah, I mean, the other analogy I thought of, it's almost like car racing, right? So NASCAR, the economy is like we were in NASCAR. We're just going around a circle really, really fast. Now we're shifting into F1, where we just don't know what's around the corner, but we're still going really fast. Yeah. And so I think it's a new sport to play, and I think in this market we just have to be a lot smarter about how we're going to navigate whatever corner might be around the corner. So.
All right, well, we're going to have to leave it there. And you're so smart, David Steinbach, the CIO over at Heinz, that really knows more about the space. You love it so much. You have some extra questions.
I know. Sorry, I know they're all going to be mad at me again.
Did you know our producers? Do you not know the hand signals?
I thought that means one more question.
All right, enough silliness here on the Milken stage out in Beverly Hills, California. Let's toss it back to Tim Stanovic. I think you know him. Back in our New York studios to check on what's happening in the market.
Don't worry, I'm always keeping things serious here in New York. Stocks were higher across the board earlier, struggling to gain traction this afternoon. The S&P 500 did rise above 5,200. It was up around 0.4% before we saw a bit of selling late in the session. Right now, the NASDAQ 100 is flat. The yield on the 10-year right now, 4.45%, down 2 basis points. Bitcoin right now at 63,000. I want to talk a little bit about NVIDIA because it's lower today after Stanley Druckenmiller told CNBC that he further cut his NVIDIA position in late March. He said, quote, AI might be a little overhyped now, but underhyped in the long term, down 1.7% right now. He did repeat that he's bullish in the long term on AI as he's ever been, and he noted that the big AI payoff might be 4 to 5 years away from now. Should note NVIDIA up more than 80% so far this year, about 5% off of all-time highs, just to put today's move in perspective. A bigger move coming from Walt Disney today, also weighing on the S&P 500. Shares falling the most in a year and a half after the company reported a not-so-great outlook for growth in streaming subscribers in the current quarter. Also said that visits to parks are expected to moderate post-COVID levels. Iger's in the midst of a years-long effort to reorganize Disney in the age of streaming as the company does lose subscribers. He's been under pressure from activist investors. He's aggressively cut costs. He's propped up ESPN, and he's tried to reinvigorate Disney Studios. On the upside, Apple, the company announcing today a larger version of the iPad Air, aiming to reinvigorate their iPad lineup. It's gone without an update since 2022. It's the first redesigned version of the iPad Pro since 2018. Look at that, Apple up by 0.4%. And Peloton is surging right now. This after CNBC reported earlier today that a number of private equity firms are in talks to take the company private. Well, coming up, our coverage continues from the Milken Institute Global Conference. Lisa Donahue, co-head of the Americas and Asia at Alex Partners, is going to join us in Beverly Hills. This is Bloomberg.
is here.
This is a get out the popcorn moment.
An across-the-board just pummeling of expectations.
Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey, folks, we've got Microsoft.
Apple earnings crossing the wire. Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
And lots still to come.
With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment? I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to our live coverage of the Milken Global Investment Conference. I'm Carol Master along with Romaine Boston. Right now we have another lineup. They're waiting for Magic Johnson.
Magic Johnson, yeah.
Pretty cool stuff. So we'll follow it.
I hope you're keeping count because we have to figure out who was the longest line. Was it Elon Musk, Magic Johnson, David Beckham, Javier
Elon
Milei?
Musk, you couldn't even get in. It was kind of crazy. All right. We're going to get back to the markets because we've got a great indicator of what is going on in the financial and business environment. It is through the world of restructuring and turnarounds. And we've got a great voice on that. With us is Lisa Donahue. She's Alex Partners, co-head of Americas and Asia, joining Romaine and myself here at Milken. Welcome, welcome. Nice to be talking with you.
Great to be here.
I do think this is a great indicator, right? We look at different metrics about the business environment, what's going on more broadly. What are you seeing and what does it tell you about the macro?
You know, we're talking a lot. We see hundreds of companies. We work with C-suites, executives, and what we're seeing is forward-thinking leaders are getting prepared. If you think about CEOs in the C-suite, they've been dealing with disruptive forces for years now. COVID, ground wars, technological disruption. A lot. So forward-thinking leaders are thinking about flexibility, agility, how to take some of these challenges and look for the opportunities in them.
Lisa, there's big forward-looking, and then there's the cumulative effect of a great financial crisis, a pandemic, disruption. Having said that, are more companies in trouble? Are they looking to do restructurings and turnarounds?
I think more companies are trying to think smartly about how to operate in this high interest rate environment and how to deal with whether it's a capital R recession, small R recession, but really changing consumer behavior. And if you think about some of the economic drivers of certainly the U.S. economy, it's the consumer. So thinking about if that starts to be a slow trickle, what management teams can do to get ahead of that and to be prepared and to think about how to pivot and think about how to react.
And also the whole issue that what's ailing the economy, if you will, isn't just cyclical. There are structural changes as well. So I would think that means as a corporation, you have to take a structural look at your business, whether that's divestments or acquisitions or whatever, or a complete turnaround here. What type of questions are you getting on that front?
You know, that's an excellent question, and you hit the nail on the head. We're working with so many executives on what should their business model look like? What should they be doing to be kind of fit and ready, fighting ready when more disruption comes? We're talking a lot about carve-outs. We're thinking about what 5 years ago may have made sense as part of your conglomerate. Now it doesn't, and what isn't great for you may be a jewel for someone else. We're looking at customers. I mean, the simple truth is all customers aren't created equal. Is it time to fire a few customers and take a look and really understand full-on cost to serve?
Yeah, and on that point, though, as these companies sort of make these assessments here, there's this idea that what's happening now is kind of slow-moving, at least relative to, say, global financial crisis, some of the big sort of shocks where all the pain kind of happened at once. Do they have a bit more of a luxury of time on their side this time around versus past crises?
You know, I don't know that I'd call it a luxury because I think the C-suite of today is dealing with faster and faster change. We're dealing with two ground wars, the emergence of more accessible AI. I mean, the truth is AI has been around for over a decade, but when you think about what ChatGPT means in some large language models, what a lot of our companies are thinking about is how can I use that? How can I use that to be more efficient? We're working with a very healthy company, and what they're trying to think about is how do I use customer fragmentation? How do I use to enhance the customer experience, target the customers in the right way, not in a robotic way, but in a human, authentic way? So there's some really cool things, I think, coming out of AI. And again, I go back to the forward-thinking executives, the executives that are thinking, okay,
This may be a little rough sledding, but I'm going to be ready for it. I'm going to be lean. I'm going to be forward thinking. I'm going to think about opportunities versus just crisis.
So, Lisa, one of the featured speakers was, of course, last night, Elon Musk. He did not talk about Tesla.
No.
We waited, but it didn't happen. But you are seeing something when it comes to the electric vehicle space. Give us an idea, because it does feel like, yep, there's still growth, but it's at a slower pace. What are you seeing?
You know, I do a lot, we do a lot of thinking about energy transition and what that means, not just for electric vehicles, but across the whole electric grid. And I think one of the biggest indicators of maybe a little bit of a slowdown. I think, folks, everyone knows where we want to go, and everyone knows that ultimately we're going to get there. The question is, how long does it take? What are the steps in the interim? And in my mind, what is the required infrastructure to support it? And you think about what happened with Hertz and the pullback on their electric fleet as a result of the primary market prices going down, which then, of course, affect the secondary market prices going down. And maybe the consumer wasn't quite ready for longer hauls, not feeling comfortable with the charging stations and understanding what the infrastructure looked like. I think we're still getting there. I think we will get there. I think that the hybrid is the now, and the EV is the future.
But are you doing restructurings and working with companies that kind of need to reset their metrics in the EV space?
We're working with companies that are trying to think more broadly about, from a macro perspective, what's happening and what does that mean to me, and importantly, what does it mean to my customers and my competitors
in that space.
In that space, but honestly, energy transition impacts all of us. So it's not just uniquely that space, but in that space, helping them think through how to be more efficient, how to, again, speak to the customers, and then what that transition means to you as a CEO, as a C-suite executive.
Another big change that's been going on over the last few years is the refocus on supply chains.
Yes.
Obviously, you're in the U.S. We had the big disruptions globally. We had the big disruptions from the pandemic. There's been a big push in nearshore because of trade wars and other geopolitical issues here. Is this going to also potentially be, I guess, a new avenue of business or an expanded avenue of business for you?
One of the things, as you know, you mentioned that I focus on Asia as well. And I've spent, in the last 18 months, I've been there 5 times across China, Singapore, Tokyo, et cetera. And there's a couple of things that we're seeing as it relates to supply chain. Number one, and I get asked this question a lot, I don't think that we're going to be deglobalizing and moving completely away from China. We're too interconnected. It's too big a market to ignore. But what I am seeing is a lot of large global manufacturers are thinking about redundant supply chains. They're thinking about keeping what they have in China and looking at Vietnam, Japan, and Mexico has been a huge beneficiary of that type of movement. But I think, and what we're seeing and what we're working with folks on is, yes, it's about cost, but it's only about cost. It's not only about cost. It's about surety of delivery and making sure that you actually get the piece so you don't shut down your manufacturing line because of uncertainty with a long supply chain.
Yeah, fascinating. I do think about, though, the redundant costs of maintaining those supply chains, especially when you bring them back home.
Yeah, but, some of them, they have no choice to do that, right?
Absolutely.
And I think to Lisa's point, the idea that it's more than just the initial financial cost, right? It's the longer term.
The pandemic showed that, too, and some of the technology battles or the geopolitical battles that we are having. Lisa, great to get some time with you.
Thanks.
So appreciate it.
Great to see you guys.
Lisa Donahue, she is co-head of the Americas and Asia at Alex Partners.
Yeah, and then she brought up Mexico too. I mean, we've seen we have to do a whole show on that because I'm fascinated by that and how much has been moved back towards the border. And remember, we went through this before back in the NAFTA days, and then it kind of died down.
We recently caught up with the architect Gensler, and they are global, and they talked about all of the activity and facilities that they're building specifically in South America, Mexico in particular. So it's happening.
Absolutely. Will you be around for that show too, or do I need to check with Tim?
I don't know. Let me think about it. Let me ask my schedulers.
All right, a lot more coming up here from the Milken stage in the lobby of the Beverly Hilton here in Los Angeles, California.
Magic Johnson is coming up.
Magic Johnson lined up here, but you know what? We got a line on the other side. You can't see it. It's not quite as long, but they all want to hear from our next guest, Kip DeVere, the head of the credit group over at Ares. A lot to talk about with him after the break. Stick with us.
This is Bloomberg.
Welcome back to our special live coverage of the Milken Global Institute Conference in Beverly Hills, California. I'm Romain Bostic alongside Carol Masser. A big focus today, not just on the broader investment space, but really on direct lending and alternative credit. And one of the specialists in that space, Ares Management, still seeing opportunities out there. That includes, well, even helping buyout shops shore up the companies they back against higher interest rates, while at the same time providing cash back to fund investors without necessarily having to sell those underlying assets. I'm pleased to say that the head of Ares Credit Group is joining us right now. Kip DeVere live here on the Milken stage. Kip, great to see you.
Thanks for having me.
Where are you finding opportunities right now?
So we're actually finding a pretty good constructive backdrop for everything that we do. Just as a reminder, credit, real estate, private equity, secondaries, and we play in a host of different geographies. Obviously, our largest business in the U.S., but we're in Europe and we're in Asia as well. So I think my quick takeaway is we're actually seeing the economy better than we might have expected at this point.
U.S. economy? U.S. economy or everything?
I think the global economy is saved for a few, but the U.S. economy in particular, for sure. We've been questioning a little bit, isn't transaction activity down a lot? And then when we go back and look at the deployment that we've had in our businesses, it would actually tell you that we're doing fine. To me, that means we're picking up market share and just continuing to be more and more relevant in all the businesses that we're in.
With some of those transactions, are we primarily talking about kind of mid-tier, middle market type companies or something bigger?
Yeah, I mean, we have a pretty broad credit business. So today it's about $300 billion of assets in 5 different businesses. I mean, it ranges from the lower middle market, which can be probably as small as 20 million of EBITDA, but increasingly we're able to finance these much larger companies that you all are writing about at Bloomberg. So, you know, multi-billion-dollar deals as well.
What are those deals looking like? And I'm curious, in a higher rate environment, how that kind of impacts the financial structure a little bit.
Sorry, it's so loud in here. Can you say that again?
So what's kind of, in terms of a higher rate environment, how is it impacting a little bit the financial structure of the deals? It is really loud.
You know, I mean, I think, look, the good news is a higher rate environment means that assets are worth less. And that's true real estate, corporates, et cetera. So you're starting to see a reduction, I'd say, in purchase prices on corporate assets and certainly on real estate. And of course, with higher rates, that helps because you don't need to set these companies up with as much debt.
What kind of deals are getting done in real estate in particular? I think we continue. We've had a couple of conversations on the residential side of things, also on global properties in general and office as well. So what kind of deals are happening? Are you finding of interest in real estate?
My day-to-day is not, frankly, living in the real estate business, but I think if we surveyed everybody in real estate at Ares, it's really important that you don't take too broad a brush on real estate, right? So office is very different than we think industrial and multifamily, or most of our portfolios are, both on the lending side and on the equity side. I think office is tougher, and it's a bit of a we'll see. Although, you know, we're all in New York. You've probably read the articles. The A properties in New York are fully leased up, and the B properties are not. So I think it's just, you really have to be a good asset selector and a good lender going in and doing the fundamental work, depending on the asset class and depending on
really know it, yeah.
Well, with some of the strength we are seeing in the economy, and more importantly, some of the stability we're finally seeing in the rate environment. I mean, and this goes beyond just real estate. Overall, is that helping facilitate more transactions?
There are all sorts of, and we talked about this on our earnings call last week, there are all sorts of contributors that should lead to increased deal activity. So we think plateauing, you know, of rates, or the lack of continued rise of rates is one. We've talked about this a lot publicly, that most investors, our LPs, are really have significant appetite to get capital back. And there's a lot of money in the ground in leveraged finance space and in private equity and elsewhere that's going to need to compel transaction opportunities. The economic backdrop being good, obviously, is one of those as well.
What does fundraising look like for you right now? Is that more difficult?
I shouldn't really talk about it in any specificity, but we mentioned this on the earnings call last week. We raised $17 billion of capital last quarter at Ares, and about $14 billion of that was in credit. So the good news is, in a lot of the places where we live, it has not been any harder. I think there's a real change in the way that investors have approached their portfolios public versus private, liquid versus illiquid, et cetera, and that's continuing to create tailwinds for us.
You know, Kip, $14 billion on the credit side, that's a nice little bucket, if you will, to put to work, right? $14 billion. How quickly do you think you put that to work in this environment, or how quickly do you want to?
I mean, we try to be thoughtful, obviously, as we raise capital, and the way that we justify capital raises with our investors is certainly with our belief, and we think their belief that we can obviously deploy along with what we've raised in terms of the capital. So I think if new deal activity really does pick up a bit, it'll be even easier. But we've been hitting our deployment targets, as I mentioned earlier, regardless. So we wouldn't be raising the capital if we didn't think that we could deploy it over a reasonable period of time. That being said, having dry powder is really nice as the markets are always transitioning.
Kip, what are investor expectations? I talked a little bit about the higher rate environment. In an environment where you can get about 5% on a 10-year, you know, it's just like, I think the rethink about expectations of what investors want longer term.
Oh, look, I mean, the reality is in a lot of the businesses that we're in a spread product. So we need to provide, you know, attractive risk reward relative to the risk-free rate, and that's how we think about things. So there's no doubt, and base rates going up has helped because a lot of what we do is floating rate assets. But the private markets in particular have to shift with the risk-free rate and with the public markets.
I want to talk about Ares as a business. You guys have been expanding into Asia. You have a new a new wealth management offering here. First, talk about Asia and the opportunities there. Is that where most of the growth is going to be? Do you think so?
Well, I mean, we have some really well-established platforms in Asia. It obviously represents a tremendously large market, but I'd say in our businesses, it's probably less sophisticated than certainly what we have here in the U.S. and also in Europe. So I just view it as earlier stage. There we basically have a credit business that does performing credit and also special situations, and we recently acquired a private equity manager based in Singapore there that I think should provide growth. I think in Asia we're focused on other areas, whether it's real estate, infrastructure, and real assets as we try to grow into a larger footprint there.
But, you know, it's interesting. We bring up Asia, and, you know, obviously you go back a few years, and I feel like we always talked about China, but Japan is all of a sudden, especially here at Milken, we're hearing many investors bring up the Japanese market, the opportunity that it presents for you guys specifically in the area of credit.
Yeah, I mean, we think, look, the reality is it's an enormous economy.
Yeah.
With a very sophisticated business community that is massively underallocated relative to the rest of the world in terms of alternatives. And the reason for that is obviously just the required rate of return that they need over there has historically been lower based on the way that their economy works. That's probably changing, but I think they're also getting more sophisticated and frankly more interested about wanting to really roll up their sleeves, do the work, and get invested in alternatives. And when you talk about a 1% shift in the portfolios over there from traditional to alternatives, the numbers get very large very quickly.
Yeah, what is the differential right now in terms of the allocations that you see to alternatives in the U.S. versus, say, in Asia, particularly Japan, or even in Europe?
Yeah, I mean, I think it depends who you are, whether you're, you know, a pension versus a sovereign and an endowment, which will typically have a much longer range and then much higher allocation to alternatives. The allocation in Japan today is virtually zero.
Yeah. What about how you're structuring deals right now? There's been a lot of discussion about how alternative asset managers, private credit funds are partnering with a lot of the bigger money center banks, the more traditional banks, to get deals done. I mean, they're basically calling you, and not necessarily you going to them. Is this going to be kind of the structure of deals for the foreseeable future?
I mean, I think because on the new transaction front, we're a natural partner for banks. We obviously buy loans and buy high yield and syndicated transactions from banks in the regular way. We're also a good junior capital provider, which is a business that they have had less and less interest in over the years. But I do think over the next couple of years, banks will keep rationalizing the types of businesses that they're in, and will probably sell a portion of this business or that business. We think we can be very good buyers of those businesses.
Private credit, is it getting crowded at all? It feels like everybody, even this week alone, we're like different tie-ups and link-ups, if you will, between traditional finance and some of the private credit players.
I've been doing this for 20 plus years, so the market has just grown substantially, right? So when we started, We talked about financing $10 to $50 million EBITDA businesses. As I mentioned to you earlier, we can now talk to much, much larger companies because of our capital base. We think it's a business that actually gets easier as you get larger, i.e. there are real scale advantages. So is it more crowded? Is it more discussed? It is. But when you look at the risk reward and you look at the results that we're generating for investors, I think they're still pretty compelling.
What can you give us in terms of insight about returns to investors? Returns to investors.
Very little.
Come on.
Are they being more demanding, though? I mean, we've heard a lot. We've talked to LPs ourselves. They've talked about this idea of either wanting a quicker return of capital or wanting to see better returns than what was promised when they first entered into those vintages.
Yeah, I mean, I think, and I just got here last night, but apparently everyone's been talking about DPI, which is obviously how much capital you can return to your LPs. I think what the LPs want first and foremost today is more return of capital because they're mismatched in terms of how they want to be able to reallocate within their portfolios.
Yeah.
I don't know, our LPs are always tough on us to generate good returns. If we don't generate good returns, they'll fire us or they'll hire someone else.
Good stuff.
Well, can I squeeze one in?
Please.
Just about your existing portfolio there. I mean, I know you guys kind of rank those. You have that whole system. I think it was like 1 to 4 or something. Like when you talk about the quality of what you already have,
yeah,
are you comfortable with it?
Yeah, we've said this over and over here and over the last couple of months. Things from an economic perspective are better than we probably would have thought.
Yeah.
Defaults in loan and alternative credit portfolios are still materially below historical averages.
Yeah.
I get the question a lot of, do you expect they'll go up?
Yeah.
And if rates remain higher for longer, the answer is probably yes.
Okay.
But we're not forecasting, anything other than probably a traditional credit cycle. And that should lead to, I think, just dispersion of results. We think the really high quality firms with great origination and great risk management will continue to succeed, and the smaller folks who haven't been in the business quite as long could have a harder time.
All right, Kip, we have to leave it there. We're going to try to get you to bump you to the front of the line for Magic Johnson here. Kip DeVere over Ares Credit Group here. I want somebody to bump me into the front of the line. I don't know. I mean, it's a big deal. You should get right to the front of the line. All right, I think we got to go back to your colleague, Tim Senator. Is he really a nice guy?
He's a fantastic guy. He's really nice. You're nice and he's really nice. All right, let's head back to New York and get a check on the trade. Tim, over to you.
You can come back, Carol. Stocks were higher across the board earlier, struggling, though, to gain traction as we get later into the session. The S&P 500 did briefly move past 5,200, was up around 0.4% before saw a bit of selling late in the afternoon. Right now, the Dow higher by 0.1%, the S&P 500 higher by about the same, while the NASDAQ is lower by more than 0.1%. Yield on the 10-year, 4.46%. Some breaking news just in the last hour or so. The U.S. has revoked export licenses that allow Intel and Qualcomm to supply Huawei with semiconductors, this according to the FT, citing unidentified people familiar with the matter. The U.S. Commerce Department's move affects the supply of chips for Huawei's laptop. Shares of Qualcomm took a leg lower on the news, down by 0.5% right now. Also weighing on the S&P 500 and NASDAQ 100 today, Tesla. Shares lower after investors learned that the company is facing increased federal scrutiny of autopilot. The National Highway Traffic Safety Administration is looking for information that will help determine whether the company's biggest ever recall made its driver assistance system safer. NHTSA opened a recall query last month after 20 more crashes occurred in vehicles Tesla tried to fix with an over-the-air software update in December. Shares also did move lower after we got some data from China that showed shipments from its Shanghai factory dropped 18% year-on-year in April. In other news, Palantir shares having their worst day in nearly 2 years, even after the company boosted its revenue forecast for the year. Expectations were high going into the print. Palantir shares down by close to 15%. We got much more coming up live from the Milken Institute Global Conference out there in Beverly Hills, California. Don't go anywhere, because coming up next, Katie Koch is going to be out there in Beverly Hills. She's the CEO of TCW. She's going to be joining Romaine Bostick and Carol Masser at the Beverly Hilton. This is Bloomberg.
Welcome back to our live coverage of the Milken Global Investment Conference. I'm Carol Master alongside Romaine Bostic, and we are just watching everybody kind of channeling in to see Magic Johnson. So we'll see what he has to say at the event. We do want to remind you that a recent Bloomberg News morning consult poll of voters in 7 battleground states this month showed that more than half expect the economy to be worse by the end of the year. And at least half of voters say they expect the inflation rate and borrowing costs to rise even higher than they are now. But we're going to get another read on inflation next week. High prices are causing some consumers to change their spending habits. For a read on that and more, we caught up with the CEO of Whole Foods, Jason Beekle. We talked with him earlier here at Milken.
For me, one of the most important areas for us to think about is how do we protect our food systems into the future and making sure that our future generations can enjoy the products that we know and love today. And as Whole Foods Market,
That sounds kind of dire. Wow. What do we need to protect? Are you talking supply or quality or both?
Yeah, both. One of the things that we're currently in a situation of is the nutrient density in our soil today is not in a state to sustain itself for future generations. So the products that we know and love are at risk of not being available for future generations. And so for us as Whole Foods Market, one of the things that's been very important since our very first store that we opened in 1980 is helping support the environment and areas like regenerative agriculture, which is something we're really passionate about today. Going back to our very roots, we led the industry in organics, and what we want to do is continue to make sure there's awareness for our consumers that we have to protect our resources to ensure that our food systems are protected for future generations.
Did you know Jason was a farmer at the age of 7, I believe, doing gardens?
Is that right? I started gardening, when I was 7.
So you know a lot about agriculture and regenerative agriculture. You also know that trying to do that on a national scale is hard, right?
Very difficult.
A lot more local, don't you?
Not necessarily just local, but a big part of this is making sure that we're doing the work to protect our soil and ensure that it can support regenerative into the future. And one of the other things that I think is really challenging for customers is understanding the difference of various climate-friendly agricultural practices.
But how are you doing that? Are you working with your suppliers? You're working with the farmers? Or are you going in directly and doing this yourself?
Yeah, so the reality is it takes an entire network of stakeholders in this space to help support this work. First and foremost, we're working with our suppliers who are working with their farmers to help support this work. As we led organics since our very first store, this is something that's really part of our DNA. And being able to work upstream and supporting processes that can help take these practices into fruition.
It's interesting, like organics, they're starting to mark things, right, that are, I think, regenerative farming. They're starting to let consumers know that when they buy something that's the way.
Yeah.
One of the things we have to ask you is, how is the consumer doing? And what is, once again, the consumer of Whole Foods?
Yeah, so I think the consumer right now is wanting a balance of quality and value. And that's something that we've been really focused on as Whole Foods Market. One of the things that we're really proud of is the work we've done investing in our price points so we can be accessible to all customers. Since being part of Amazon, this has been a key initiative for us to help improve our price points. Recently, we've done a lot of work in helping also amp up the number of promotions that we're doing. We know customers right now are looking for value, so we've increased our number of promotions. We made investments in areas like our opening price point and like our 365 items. So customers have a great opportunity for value and quality at the same time.
Talk about the private label, the 365, because that's been a big initiative in bringing kind of that average price point down in the stores.
Yeah, absolutely. So for us, this has been a key way to connect with customers. We've continued to expand the number of items across all different parts of our store and also providing choice. So we have 365, where you can have a conventional product as well as 365 organic. So giving customers choice and options along the way.
And that was Whole Foods CEO Jason Beekle earlier today. Well, yesterday, a deal between PNC Financial Services Group and the TCW Group on partnering to deliver private credit solutions to middle market companies. Private credit, there's a lot going on, continues to be. Great to be talking again with Katie Koch. She's CEO of the global asset management firm TCW, which manages approximately $200 billion in client assets. You've been busy.
Thanks for having me on. Yes,
Nice to have you. Tell us about this deal with PNC.
Yeah, sure. We're just by background. You mentioned TCW as a $200 billion global asset manager. We were an early entrant to private credit. That is led for us by the extraordinarily talented Rick Miller, our CIO of private credit. A 23-year track record in that asset class of conservative lending that's allowed us to outperform with a low loss ratio. And we're really proud to be partnering with PNC, which is, of course, one of the leading U.S. financial institutions. They're ranked 4th in middle market lending. They have an extraordinarily talented and tenured management team, a strong balance sheet, and great client relationships. And this has been a partnership, just to answer a question how it came about. It's actually 15 years in the making. So we've worked together very closely for a long period of time. Over that period, we've done 40 co-financings. And it is also true that they are our #1 fund finance partner, which means that actually PNC had to underwrite TCW and our capabilities in order to provide leverage to our fund.